Okay, good morning everyone. My name is Marja Nykänen. I'm a Deputy Governor of the Bank of Finland. I joined the board in February 2017. Prior to that, I worked for almost 7 years in the Finnish Financial Supervisory Authority, and before that, over 20 years in Nordea and its predecessors. In the Bank of Finland, on my responsibility, I have, among other things, financial stability, but also risk management issues of the bank, so-called the second line of defense. I'm also chairing the risk committees of the Bank of Finland, which we have two, one for financial risks and the other for operational and cyber risks. The first cyber conference was organized in Copenhagen last year, and today I'm happy to say that we have over 200 participants. We want to inform you that this event is streamed and it is possible to follow the event on the Bank of Finland's YouTube channel, so we are very modern. The opening speech, Cybersecurity for Financial Institutions, was supposed to be given by our governor, Olli Rehn, but we have an incident, an operational risk coming through, so he got flu. So in that, I talked with him Tuesday morning, and I have to say that it was not a man flu. So he's ordered to stay in bed for the rest of the week, and he's obeying that order. Therefore, he sends his best regards to this conference, and he's very sorry not to be able to participate, so you have to listen to me instead of him. So, ladies and gentlemen, you are warmly welcome to this conference entitled Nordic Cyber in Finance and hosted by the Bank of Finland. As we know, in the world of digital technology, everything happens at lightning speed. What was breaking news yesterday may already feel old and familiar tomorrow. Therefore, I will only be half joking when I say that we, the Nordic banks, central banks, have a long tradition of co-hosting a cyber conference every year, as this is already the second event of this kind. The first one was organized in wonderful Copenhagen 1 year ago by our dear Danish colleagues from Denmark's Nationalbank. The event was so well organized that it will be difficult to improve on it, but one thing we have added to an event hashtag, one thing we have added is an event hashtag Cyber in Finance. After all, the Bank of Finland already has 90 experts active on Twitter. One of them, by the way, is a robot who tweets real-time economic forecasts. And let's see if at SP Nowcast, that is the name of the robot, has tweeted anything this morning. Today we will continue the discussion started in Copenhagen and focus on a handful of timely themes within the domain of cybersecurity. Among these, we will hear very substantive presentations on hybrid threats, as well as data breaches, which has been a topic much talked about throughout the year. In my opening remarks, I wish to raise awareness of one additional important topic. That is the link between cyber risks and financial stability. To simplify the issue, whereas we are already striving to make sure that a single banker cannot bring down the entire financial system, in the future we also have to make sure that a single hacker cannot bring it down either. Let me now elaborate on this notion. This year marks the 10th anniversary of the global financial crisis. The The roots of the crisis were in the US mortgage market, but there were complex interdependencies and global imbalances which contributed to the problem. I will not delve deeper into the sequence of events, as they have been covered in many good books and articles. Instead, I wish to look at some of the key lessons from the crisis and to learn and to draw parallels between them and the cyber risks we are facing today. First, the great cyber moderation. The years preceding the global financial crisis were commonly described as the Great Moderation by economists. The concept refers to the long period of low volatility in financial markets and relatively calm in the wider economy. Business cycles were subdued and banks were profitable year in, year out. To many, it seemed as if financial institutions had permanently mastered risks, and the world had found a way to grow steadily without recessions. As we know now, that long period of relative calm was suddenly disrupted by the collapse of Lehman Brothers and the credit crunch and the recession that followed in the real economy. The Great Moderation had only been a mirage. We have witnessed many serious cyber incidents in the last few years, some with international significance, but none so far have directly disrupted critical market infrastructures such as payment systems. This is because we have comprehensively mastered, comprehensively mastered the risks, or have we merely been lucky so far? What can we learn from the financial crisis is that just because we have avoided a systemic cyber event so far does not mean that the risk of one occurring has decreased. We should not let ourselves lull into false sense of confidence. Next, interconnectedness. When the financial crisis unfolded, it became clear that financial institutions were much more interconnected and dependent on each other than either market participants or regulators had previously understood. Financial risks became systemic because banks had correlated exposures and because a complex web of contractual obligations created contagion channels for the crisis to spread. The growth of digital technology in the financial sector has created another kind of complex web between financial institutions, namely one of computers and information systems. This will be further accentuated by the emergence of open banking. We should therefore apply the concepts of correlated exposures and contagion channels also from a cybersecurity point of view, and make sure cyber events have a limited impact if and when they occur. Then about bank resilience. Resilience is a word that is used by both the financial community and the cybersecurity community. The financial crisis taught banks and banking regulators that it is essential to maintain sufficient capital buffers to create resilience against unforeseen financial shocks. The most important regulatory steps taken in Europe to make the banking sector financially more resilient and the creation of the banking union and the development of a new macroprudential framework. Cybersecurity experts, on the other hand, talk about cyber resilience when they refer to an organization's ability to withstand, contain, and recover from cyber attacks. The Financial Stability Board has recently published a cyber lexicon where this concept has been carefully explained. Going forward, both types of resilience are important for financial institutions, but cyber resilience cannot be built by adding capital buffers. Each type of resilience requires its own policy tools. Capital buffers can protect a bank from financial shocks by improving its long-term solvency. But it is also important for the bank to hold sufficient liquidity to be able to meet its short-term financial obligations. The importance of and distinction between liquidity and solvency became a central topic during the global financial crisis. The analogy to financial liquidity in the cybersecurity context are contingency arrangements. Contingency planning and backup systems enable financial institutions to continue operating while a cyber event is occurring and until a problem has been fixed. Independent control over critical infrastructures, such as payment and settlement systems, has to be maintained to prevent a potential cyber event from causing a disruption in the wider economy. In Finland, a viable national backup system for payments is needed and is currently work in progress, one that can be deployed in emergency situations without the need of international assistance. Dear friends, as you can see, there are many parallels between financial stability and cybersecurity. I have already highlighted 4 of them: false confidence, interconnectedness, resilience, and contingency planning. Before I conclude, let me add 2 more. First, understanding the risks of new innovations. Before the global financial crisis, there was talk about innovation in the financial sector. But instead of fintech, it referred to financial innovation. What was meant by that term at the time were new financial products, often securitized investment offerings, such as mortgage-backed securities or credit default swaps. While these then new innovative products helped create more efficient markets, they also brought with them plenty of new risks. There was not enough time and not enough experience to understand the true risk profiles of some of these products. As a result, risks were more than often mispriced and under-regulated. Again, we can see a parallel in cybersecurity. Today, the emergence of fintech is bringing to the market new offerings for both households and businesses. There is now a wide selection of payment apps, investment tools, and other types of digital financial services available. Many of these are based on technologies such as artificial intelligence and open interfaces, of which we do not have much experience yet. It is important that we analyze carefully how these products work, so that we have a good understanding of the risks involved. This also requires regulators to move out of their traditional comfort zone and become more knowledgeable about technology. Then about divergent risk preferences. Finally, I would like to remind ourselves of the concept of moral hazard, which became important during the global financial crisis. A central dilemma in the financial sector has always been the trade-off between risk and reward. Financial businesses, such as banking, trading, or insurance, are essentially about calculated risk-taking. However, in many cases, the risk appetite of individual financial institutions is too high from the point of view of the rest of the society. There is thus a negative externality with regard to risk-taking, which can lead to what economists call moral hazard. Does this old dilemma of divergent risk preferences repeat itself in the case of cyber risks? At least in theory, that may be the case. Let me be clear. There is currently no reason to think that our banks and other financial institutions were not, and indeed are not, well protected against cyber risks. But the financial crisis showed us that systemic risks are risks which an individual institution is not taking into account unless motivated to do so by regulators. As an example, an individual bank does not necessarily know whether it is a single point of failure in the wider financial system. In such a case, it is the regulator who needs to see the bigger picture. It is the regulator who needs to identify concentrations of risks and then use policy measures to introduce precautions. The types of precautions are different in the case of financial risks and cyber risks, but the basic principle is the same. Ladies and gentlemen, dear friends, we have had many financial crises in history, but none of them have been created or caused by a cyber event, at least not so far. But the concept of systemic risk has become broader, and cybersecurity is becoming an integral part of the financial stability framework. Based on the experience from the global financial crisis, combined with an increasingly complex industry landscape driven by digitalization, regulation in the financial sector is more necessary than ever. But it doesn't have to mean over-regulation. One has to find the right balance between creating a safe and sound business environment while also allowing innovation to take place. It also means finding the appropriate tools and responses to the risks at hand. Since the threats to financial stability are becoming increasingly technological and also more global, this calls for more cooperation between authorities, both within a country but also between countries. A global response is needed by putting to best use the international institutions that have been established in recent years for maintaining financial stability. I hope these thoughts will motivate a lively and productive discussion in all the sessions today. Let me wish you a pleasant stay in Helsinki and a very good conference. Thank you and welcome. Okay, thank you. But now, next we will move on the first session, which is called Cyber Threats in 2018. And some house rules. I suggest, it's not a rule, it's a guideline. I suggest that the questions from the audience are asked during the panel session because both of the coming speakers will be participating in the panel after these remarks. First, we have Samu Konttinen, who is the CEO of F-Secure. Previously, he has served, among others, as Executive Vice President of Corporate Security and of Consumer Security. He also has been a member of the F-Secure leadership team since 2009. He joined the company in 2005, and in his earlier career, he worked in sales and channel management. Mr. Konttinen is the chairman of the board of the Finnish Information Security Cluster, FISC, and a board member in Ixonos plc. So Samu, welcome. The floor is yours.
you, and warm welcome also from my behalf to this interesting and very topical conference today, talking about cyber topics. So I'll have a couple of ideas that I'll try to get across, and also paint a bit of a view how do we from F-Secure perspective see the threat landscape of today. So very briefly about F-Secure. So we are about 1,700 experts in cybersecurity domain. We've been around for about 30 years, so we are pretty much one of the original and oldest cybersecurity companies. We have existed as long as there has been computer viruses to fight against. So first, so today's cybersecurity is not secure. That is a bold statement. How can we conclude that today's cybersecurity is not secure? The thinking therefore goes that line of thought that it is a massive industry. So financial institutes, public sector, private companies, consumers. The global spend in cybersecurity is beyond 100 billion. So companies and individuals, specifically companies, they spend enormous amount of monies on securing themselves, securing their brand, securing their assets, securing the data of their customers, and yet this is not working. Working with one of the companies trying to achieve this is almost an oxymoron to say it, but this is not working currently. If you look at the cyber criminal activity and the success rates the criminals have, they are becoming more and more successful all the time. This is an increasing problem despite there is an increasing effort from companies to protect themselves. So it is a bit of a murky view, but if we take this that it is the good guys fighting the bad guys, currently the situation is not that it seems like that the good guys are winning, unfortunately. And I think to this audience, this is probably rather self-explanatory. So the cyber criminals, financial institutes, it is one of the target audiences for these guys, as vast majority of the cyber crime is financially motivated. Not all of it is financially motivated. You have also other actors who are not after your wallet. Those would be actors that we would categorize like, as an example, extremists. So they could be like a terrorist organization who go after disruption. And then you would have a group that we would categorize like hacktivist. So the hacktivist would target a specific organization, not having financial motivation. They could go after like a nuclear plant because they think that the world would be a better place without nuclear power. They are not financially motivated, but vast majority of the cyber crime is financially motivated. And if we go back in time, say 15 years, not 2 years, 15 years, so we saw a lot of cyber activity coming from the hands of students and hobbyists. They just wanted to prove the world how brilliant they are on bypassing the most intelligent firewall. They just wanted to show off how could they hack into some organization. They just wanted to see whether it could be done or not. Today this is not the case. Unfortunately, you must conclude that these hobbyists and students, they're practically gone. So you could say that all of the cyber activity behind the scenes is in the hands of organized criminals. This is the situation. And then looking at the threat landscape. So here you have quite a few different points of view to understand. First, if we start from the really basics. So on a normal business day, and not even a business day, the weekends count as well. So on a normal day, like today, if at the end of the day, I go to F-Secure Labs, and if I ask our people, so how did we do today? What did the world look like today? The normal answer is that, well, it was a normal day. We saw about 500,000 new viruses. This is like a normal day, about 500,000 new viruses. Then when it's about a million new viruses, then that's a busy day. But this, I think, that's the basic stuff. And I think that the world has gotten pretty good on fighting these basic attacks. The success rate for organization is really darn good. I think we are looking at 99.9 something like so. These things you can stop, but you cannot stop all of them. Then there are other elements beside these volume attacks. Many of you may have read about a year ago about the WannaCry incident that took over the world. I think more than 300,000 organizations fell victim for WannaCry. But what makes WannaCry rather interesting, although it was a kind of a quite normal ransomware attack that somebody was after your wallet, but how come they were so successful? And this is where it gets interesting. The most powerful attackers, they probably don't appreciate me calling them attackers, but the most powerful entities would be nation-state actors. It would be the guys like NSA or the similar organization from China, from Russia. So these nation-state actors, they are the most powerful. They have practically unlimited results and resources. Now, how does that link to WannaCry? WannaCry was possible because NSA, with their unlimited resources, they had developed an exploit, an attacking method that would penetrate practically every organization. This is what these intelligence organizations want to achieve. Now, unfortunately, that exploit leaked, so it got in the hands of criminals. And this is a very difficult phenomena in the cyberspace. So these tools that are developed by nations, they get into the hands of criminals, and then the criminals use them. And it's very difficult to defend against those. NotPetya, which began right after WannaCry, quite similar, but there is another phenomenon that we need to understand, which is a supply chain attack. And this is another type of an attack that is really difficult to fight. So what supply chain attack means, that NotPetya, they didn't go after organizations directly. They went after one accounting company in Ukraine. And that accounting company in Ukraine, they have a software that you need to use to report your taxes in Ukraine. And now practically any company who is doing business in Ukraine, you would need to use that accounting software so that you can report your taxes. And now this accounting software was attacked. This accounting software was infected with a virus. So as your companies are using this accounting software, this was the supply chain attack, so that the virus didn't hit you. The virus first hit the accounting software, and now you are using the accounting software. That's how it happened. A Danish shipping giant, Maersk, was the famous victim of this. They reported that they suffered losses about 300 million because of NotPetya. So we are talking about pretty severe numbers there. And maybe the last one that I would want to highlight here is that the phishing. So after all these years and after all the education that we've tried to do for people, still email is the main attacking vector. After all these years, email is still the #1 attacking vector. And when we, as an example, conduct targeted attack simulations to our customers, they want to test their cyber resilience, so they ask that could you attack us? We want to see how good we are. So our success rate is 100%. We always succeed, so we always manage to penetrate. The bad guys will too. Very often, almost every time, it's quite simple. You create an email that really looks like a legit email. It looks like it comes from your boss, and then the employees, some of them will open the email, open the attachment, click the link, and then the exploit goes out. Email. So it's still pretty simple. And then taking cyber security beyond compliance. What do I mean with that? I think your industry, the finance industry, is quite heavily regulated, and that is good. So I'm not against regulation, and I'm not against being compliant. But you have to be aware, and I trust you are, that regulation and compliance, this is very, very slow. So very often what we see, what are the latest developments in cyberspace, then regulators start to take a look at those, and then eventually there is a regulation that you need to follow, which becomes the compliance requirement. And when the compliance requirement is there, it is very often addressing topics that is very, very, very old. So this industry moves so much faster that the regulations and being compliant, you can't keep up. So I'm not advising you not being compliant because you have to, but don't go to that trap that being compliant, you can check the boxes that now I'm compliant and I'm all good. Because also for cyber criminals, they take that compliance requirement as a blueprint, because they know that you are compliant, so they know how you have protected yourself. And very often it makes attacking you for them easier, because they can immediately start looking at other attacking vectors, not going after the areas where they trust that you are compliant. So don't take this being compliant something that now you're okay. And when we talk to companies, boards, and senior leadership team about these cyber challenges, very often the first reaction is that they start looking at each other, and they just want to check that are we compliant. And if somebody tells them that yes, we are compliant, then they think, okay, then we are all good. But don't fall into that trap. And then enabling a cyber resilient organization. There is a big paradigm shift. I think 2-3 years ago, you could still quite much count on that you can sufficiently stop the attacks. Today you can't anymore. You have to assume that you will be breached. And if you cannot stop the attacks, then what is it that you have to do? What does this resiliency mean? It means that you can detect attacks that you couldn't stop. And it means that you can respond, you can remediate to the attacks once they happened. And this is an area where we see that the organizations at large, they are mostly behind what good looks like. So I think most organizations are quite good with the preventive measures. So how would you not be breached? But because the bad guys are becoming so capable, so competent, so resilient, you cannot count on that. So you have to build capability to cope with the attacks once they happened. So how do you detect and how do you respond? how do you fight back? Fighting back sounds like, well, this really is not a war, but it actually is. We worked with many financial organizations who have been under a very severe cyber attacks, and the attacker is very persistent, and even if you have now detected that you've been breached, but how do you get out from this situation, because the adversary continues attacking you. So you need to have capability to fight back. And this is something that most organizations today don't have. So please take this cybersecurity in a very holistic way. First, think how would you predict what the bad guys be doing. Second, make sure that you have sufficient preventive capabilities, minimize your attacking surface. Third, make sure that you have capability to detect attacks that you couldn't stop. And last, make sure you build yourself capability to respond to those attacks once they happened. And practice this. If you don't practice this, there will be a day when something happens and then you are kind of, this has not happened, never ever before, so what should we now do? Then you become very, very slow. You don't even know what best practices are about. So practice. And just concluding, well, this was my last slide, so at F-Secure we specialize on detecting the attacks that you cannot stop. We have 30 years history being an antivirus company. Today we do so much more, and we work with most of the biggest financial institutions in the world. So I think this was my speech. Thank you very much.
Thank you, Samu, for your interesting presentation. I think that the evolution of bank crime has been so that in the old days it was the business model for criminals was to rob a bank, and then after the financial crisis it was said that you should not rob a bank, you should establish a bank or get a banking license. But now it seems that attacking a bank with a cyber attack or sending just an email can make the case. So don't be compliant just for the art's sake. I think that was one of the key messages here. Our next speaker is Jukka Savolainen. He is the director of the Community of Interest, Vulnerabilities and Resilience in the Center of Excellence for Countering Hybrid Threats. Previously, he was a commander in a Coast Guard and has held different positions at the Border Guard headquarters, among others, as well as headed a mission in European Union police mission in Afghanistan. So Jukka, the floor is yours. Welcome.
Thank you. Okay, ladies and gentlemen, I'm very pleased to have this opportunity to talk to you because we have been thinking of you, the finance sector, in field of hybrid threats. I will stay brief in 10 minutes and hope to have my slideshow going on soon. That's it. So briefly, where am I from? This is the European Center of Excellence for Countering Hybrid Threats. We are a self-standing legal entity based on membership of states. The eligible member states are either members of European Union or the NATO. So we are a self-standing legal entity. We are no part of the European Union administration, no part of NATO administration, no part of the Finnish administration. We get our funding through the membership fees plus surplus supply from the Finnish government. Our main aim is to improve the cooperation amongst our member states, community, and EU and NATO in countering what is called hybrid threats nowadays. And right now we have actually 17 member states, Romania having joined last week. And the count will improve. By the end of the year we will have most likely Cyprus still, and potentially Greece and Turkey are still queuing. This was a rather rapid development because we started 2017 summer with 9 signatory states, so obviously we have managed to do something right. Also, the scope of the interest shown towards our activity shows in this picture because we have a Finnish head of state and the Prime Minister, and in the center we have the General Secretary of NATO and the High Representative of the European Union. And this was the first time ever when these two figures traveled out from Brussels to another destination in another country, so when they came to open our activities. So our aim is to improve awareness of hybrid threats and improve the narrative, study the issue, publish scientific and other publications, but essentially to network with the communities we are supposed to support. This means to me that I'm leading the community of interest for vulnerabilities and resilience, so we have to study the vulnerabilities of our societies and improve resilience. And in this work we will embrace civil and military authorities and public and private sectors. And now one key vulnerability essentially, of course, is the finance sector, be it banking or be it the social benefits and pensions. But by harassing this seriously, you can make a society suffer. The title was Emerging New Threat or something like that. And what I try to convince you now about is that the post-Second World War and post-Cold War global arrangement is right now being challenged. And the main motivation behind is economical. If we take you participants from here are all from EU/NATO member states and from the most developed economies globally. And that brings us, because the European Center of Excellence brings together NATO and EU member states, and this defines a major part of what is called OECD countries. And these are the well-being countries on the globe. And if I now take a critical stance from the economical science viewpoint, you must have heard this. You are representing the neo-colonial system that is utilizing the globe in an unfair way. And you are based on old traditions and old exploitation of the third countries, and you continue benefiting because you are very well interconnected and networked. And we who are outside of your networks are suffering to the benefit of you, and now we are challenging you. We want to go into a multipolar world from this unipolar that we are witnessing right now. From economic viewpoint, actually a well-founded claim. Now if we come to the terms how this competition is waged, we will find one very critical issue. We, the OECD countries or EU and NATO countries, have set us standards and criteria how we meet the requirements of democratic, open societies which follow the logics of rule of law. This is exactly the type of society where we want to live, raise kids, and do business in. Well, That's our basic strength. That's also our biggest vulnerability. Because we are open. All the documents made by government, for example, unless specifically decided so based on law, they are public, and any citizen may get the document when requiring so. The other point is that we cannot take decisions, me with a security background, we actually cannot make offensive decisions because our playbook is based on rule of law. So if anybody takes a decision that's really physically or economically harming some others, it must be really well founded. Otherwise you will find yourself personally in a legal responsibility. Let's look at the other side then. They are authoritarian governments, some are very strong, and they stay in power longer than our governments who stay 4 years only, and that's why their span of planning also is longer. They don't need to motivate their decisions in such an open manner as we do. They also carry one strength because it's a cultural challenge too. They say that we in the West have gone too far with our liberalism. Ultra-liberalist values are being promoted, and this is actually, from the global viewpoint, unacceptable. And this, of course, challenges the credibility of our political system to some extent. So we are facing a strong opposition here, a strong challenge, which is there. It's not a contemporary issue. I think it's there to remain. Now, what has been seen is this. We call this hybrid threats as some activities that they are harmful to us. They target the democratic states and institutions. They try to do something that remains mainly beyond, under the level of detection. So things happen so that we don't even realize that something happened. If something happens and we realize it happened, the main aim of the adversary is to do it in such a way that we cannot say who did it. And even if they do so robust measures that we can say who did it, this is supposed to remain under the threshold of open war. And then we come to this kind of categorization. We can talk of having now a hybrid influencing stage as a new normal. And in our communities, we must be prepared and understand that there is this kind of hybrid influencing going on all the time, including systematic gathering of intelligence, blurring our awareness of what is going on, gaining influence also by creating bridgeheads, by buying business infrastructure and creating people as agents of their interests. There will be information operations, and they are ongoing all the time. Our cohesion is being tested, and our tendency to strengthen our alliances is being tested. And our vulnerabilities can be demonstrated. More or less, this is all visible in our societies and in Finland. This can be called hybrid influencing. When it goes a little bit more serious, we can call hybrid interference. This is already active measures that interfere our system. And now, these pictures are very much from Ukraine, because this clearly now has become a test laboratory of hybrid threats. And when it goes more severe in Ukraine, you can see bomb detonations targeted at people, specifically named people. Now, very recently, we saw a test how to block a strait into a shared water area of two nations, which blocking the sea routes has enormous economical consequences immediately. And in long run, they can be really serious. We know what happened in Crimea, and we know what is going on in eastern Ukraine, where we can then call it no more a hybrid operation, but a hybrid warfare. And because in there we have more than 10,000 casualties, 3,000 on both sides from armed formations or the Ukrainian army or the Donbas area formations, and we have more than 1 million displaced persons. So this is already something that deserves the name warfare. And yet this is not an open war. There has been no declaration of war between Ukraine and Russia. So the war would be the next step, but because this is Center of Excellence for Hybrid Threats, I leave the war block out. How this relates to financing, my main point is here. You have already learned of the threats that are posed by criminals. Something was mentioned of state actors hereby, and you are representing financial sector and you are from the state more or less, but you are representing your banking industry, which is business-based, and it works within the narrow margins of business revenue, and they can of course take easily account on what they see daily. Some criminals trying to steal a couple of millions, and you try to prevent that. My message is, beware. It is possible that your finance sector and your banks and your social benefit system will be utilized either in hybrid operation or at hybrid warfare. This can be related to a military conflict or can be unrelated to a direct military conflict. And the instruments are available are those you can imagine. But if I throw you a bad case scenario, a small nation is under hybrid operation. There is a military dimension. There will be an enormous shock to the energy infrastructure and to the finance sector. And I will include there making you lose all your data concerning the ownerships of companies in your börse. What will happen next? Big turmoil. Can I or my cousin, a little bit later, make very good bargain concerning your national companies? Because the time is used, I will thank here. Thank you.
Thank you, Jukka, for your interesting and a bit scary remarks. Please, Jukka, take a seat here. We can continue with the panel soon. I think that one key taking was that even though openness is an essential part of a democratic society, openness creates vulnerability, which we have to be aware of. We will next move to the panel discussion on the cyber threats in 2018 and financial sector as a part of the critical infrastructure. I'll welcome the speakers and other panelists on the floor. So we have Jukka Savolainen, we have Samu Konttinen, and then we are privileged to have two guest stars from our Nordic central banks. Let me first introduce Martin Flodén. He's getting his headset on. It's okay if I talk while you do that. Yes. Martin is Deputy Governor of the Riksbank in Sweden. He took up the post in 2013 with a term of office 5 years. And this term has now been extended with 6 years until 2024. Martin is Professor of Economics at Stockholm University. He has also been previously a member of the Economic Council of Sweden, the Swedish Fiscal Policy Council, and the Swedish Centre for Business and Policy Studies Economic Policy Group. And then another Viking, we have Jon Nikolaisen from Norway. He is Deputy Governor and first Deputy Chair of the Executive Board of Norges Bank. Jon monitors central banking operations with particular responsibility for the bank's work in the area of financial stability. This includes work to promote efficient payment and settlement solutions. His earlier work experience includes posts as Head of Economic Policy Department in the Ministry of Finance, Head of Section in the OECD Secretariat, and Executive Director of Norges Bank Monetary Policy. We will start the panel so that both Martin and John will have their short introductions to the team, and then we continue the discussion in the panel. So, Martin, would you like to start?
Yes, I can start. Thank you very much for having me here and for organizing this conference. As you said, Maria, I have a background as a professor, but not in cyber threats at all. So I'm an economist. But these questions, throughout my 5 years in the Riksbank, those questions have become more and more important in our discussions. So as is there an echo here? I'm kind of disturbed by this. For the Riksbank, a main task for us is to promote a safe and efficient payment system. And I think in Sweden, maybe we have been a little bit naive in the last decades. We have focused a lot on efficiency. So with all these rather evident global tensions that we are seeing, that Jukka spelled out, it's evident that we have to focus more and more on the safety. Are our systems sufficiently robust, and are financial markets and payment systems sufficiently resilient? So the setting for the Riksbank is that we are seeing that payments, the payment systems and economies more broadly are becoming more and more digital. And this, I think, applies in particular to the Nordic countries, where almost all payments today are digital. And in some of our countries, in particular, I think Sweden and Norway, we have less backup systems in the form of cash, for example. So the infrastructure for cash is more and more disappearing. So we rely on the digital systems, and we know that there are single points of failure in those systems. We also know that the payment systems, they rely on the financial markets, and financial markets are not national, they are international, and in particular in the Nordic countries we have many, or not many unfortunately, but we have a few large banks that are very important for the payment system. So the perspective of the Riksbank is that we have a responsibility for this payment system to work, but we cannot do this on our own. We have to cooperate. We have to cooperate with other public authorities in Sweden, but we also have to cooperate internationally with other central banks and other regulators, but also with the financial markets. So as Sami talked about, one thing is and also Maria earlier, one thing is for each financial market infrastructure, the banks, the institutes, to take care of their own security and make sure that they have safe systems. But there are also these systemic risks that central banks have to consider, and that are maybe not internalized by each single actor on the markets. So for the Riksbank, we are not supervisor of the individual financial institutes, but we are supervising the important infrastructures, the market infrastructures in Sweden. And that includes our own gross settlement payment system. So we are putting more and more effort into making sure that we have a good IT security, of course, in our own operations with the Riks system, the Swedish RTGS system. But we are also monitoring the other big infrastructures, the CCPs and the clearing systems in Sweden. And what can we do as a central bank? Well, one thing is that we participate in international groups that develop the international principles that all the market infrastructures have to live up to. And we try to make sure that all the infrastructures in Sweden do this. And in these principles, one important thing is of course, not only that you should build the resilience against the threats and make sure that they are not successful, but that you also have to count on that threats, cyber attacks, or technological failures can still happen or be successful, and you have to have robust ways to handle those failures, to have good backup systems. We are also trying to do more and more for every year, so we are planning to step up our efforts in controlling that actually these principles are sufficiently followed by our own infrastructures and other infrastructures in the market. I'll stop there. Thank you.
Thank you, Martin. So, Jon, greetings from Norway.
Thank you. And thank you for arranging this conference. I believe it's important that we all gather to exchange views and also measures, perhaps, discussing what is obviously becoming a threat to all of us. I think, like Martin said, the Nordic financial systems are extremely efficient, and especially our payment system. That also creates a vulnerability in two ways, at least. First is being on the top, we're attempting to target for that reason, I think. And the other is that, as Martin said, because we are so digitalized, we are also vulnerable to such attacks. So I would stress, as Martin did, the importance of cooperation, not just between states and central banks, but across the financial sector. And I believe in this field, the financial industry and authorities, although there is a problem with risk preferences, we do have the same interests to fight, to combat this threat, because no bank, no financial institution will survive an attack that really hits its reputation. So in that sense, we're in the same boat. And I believe we can build on that. Nordic Financial CERT is a coordinating body for that sector, which provides services that are very useful in terms of rapid responses, such as rapid responses to security incidents and sharing of fraud indicators. And I believe that is one way to move forward. We have recently become a member of that organization, and I would encourage other central banks to join us and move forward together with the sector. We have, like many others, strengthened our capacity to respond rapidly. As an example, we have created a CSOC that supervises traffic within and to and from Norges Bank 24/7, 365 in order to detect and fight back against any attack we discover. This doesn't come for free. It costs money, and we need to weigh risks and costs appropriately. And I believe that is actually one of the threats we're facing also, that the level of risk can undermine the cost efficiency of the system. And that is something we need to take seriously as well. We not only need to combat this risk, we need to combat it in a cost-efficient manner in order to preserve the system. So ultimately, the weighing of risks and costs has to be made in the boardroom. Such judgment calls belong in the boardroom. In any boardroom, be it in a central bank or a private enterprise, I believe. Together, of course, with regulators. So while we need to tackle the threat and assess the risks, we also need to work intelligently to limit the costs. No defense chain is better than the weakest link. So I believe contingency testing and red team testing is important to practice, as you said. So that is the first measure we should take. Second, we need to work on contingency system that are sufficiently independent of the ordinary payment system, especially. I believe that's crucial for ensuring that the payment system can be restored quickly after a disruption, given that we eventually have a successful broad cyber attack. So we need to work on contingent systems. Third, and that is a special concern, I guess, for me, a number of payment system participants have outsourced the operation of their systems to a few IT service providers. This is concentration risk, big time. And such concentration risk can hardly be addressed by system owners individually. They are responsible for their own systems, but not for the system as a whole, not for the servers. I believe we, as authorities, need to determine whether current frameworks for supervision of important third-party service providers are appropriate. So, and that is, I believe, you were talking about supply chain attacks. That is an obvious potential source. So we need to work on this. So, let me end on a positive note.
Thank you.
We are, I believe, only in the infancy of this work. We will build a more comprehensive framework that will enable us to combat cyber risks more effectively, eventually. So this conference is evidence that we are all beginning to realize the importance of cooperation between us and the need to focus on this work. And that's a good start. Thank you very much.
Thank you, Jon, and thank you, Martin. Now let's start the panel part of this session. We had several severe financial crises starting 10 years ago, and there are different opinions whether it has passed or not. But anyway, I think we can agree that it started 10 years ago. These kind of reliable payment and settlement systems are the basic requirements for maintaining financial stability and fostering economic activity. This is a question you can decide who wants to start answering. My question is that, do you see that there's a very severe cyber incident, this kind of a very severe cyber incident could be a starting point of the next financial crisis? Because I think that the problem in regulation and supervision is that it is said that the generals always prepare for the previous war. So by strengthening the solvency and liquidity rules of banks and their governance issues, have been preparing for the previous war. Should we do more on cyber, and what is your scenario? What could that be the trigger for the next one? Because there will be a next one, I guess. Who wants to comment on this? John, please.
No sound? Okay.
Yeah.
So I'll start.
Please.
So it's certainly a possibility. It may well start, the next crisis may well start as a cyber incident. But I think perhaps more importantly, and now I'm sort of hinting at the hybrid side of this, so the hybrid side. An attack may be intended not to destroy the system, but to undermine confidence, public confidence in the system and in authorities. And a successful, or at least partly successful attack potentially will undermine public trust in the payment system with unforeseen consequences, I think. So not necessarily financial crisis, but perhaps the start of a much broader crisis.
Okay, thank you. Martin?
Yeah, I think I agree. So I wouldn't rule this out because the trust thing, that is extremely important in financial markets. So of course, if there is a successful attack and this leads to loss of confidence in the functioning of financial markets, that could generate, I guess, a financial crisis. But the main concern, I think, is the attack in itself. So maybe financial crisis is not the main problem if we are under these kinds of attacks, the hybrid threat. It's a threat to society much more broadly, and probably not only the financial markets would be under attack, but there are other systems that are similar and extremely important for the functioning of the countries that we live in. So I think doesn't really matter if it leads to a financial crisis or not. It will be a crisis, I think.
Okay. Samu, please.
Very, very briefly, perhaps. So I agree that we shouldn't rule that out. However, I would approach it from a kind of a threat mapping perspective that for a quote-unquote ordinary cyber criminal to be able to trigger something like financial crisis, global phenomena, I'm doubtful that impact could be so severe. So I'm more looking at the kind of the extremist or the nation-state actors, like we've seen how Russians interfered to the very core of a democracy systems in the US with the presidential elections, and I think this goes to the same bucket. So it could be some sovereign states having an idea that we would want to influence the trust worthiness of the system of some other country, and if they are successful on that could just spread out and it could become a global problem. So I think it's almost like a modern cyber warfare case rather than a cyber criminal who is after your wallet would trigger that.
Okay, thank you. Jukka, please.
Yes, by profession I will emphasize that there might be an interest to create a big turmoil which is connected to the right timing and the right political circumstances also, and even geopolitical. And you mentioned the 2008 financial crisis, and it ate a lot of our gross national products, but I didn't see any change in estate prices. So most likely the monetary and fiscal policies worked in a masterful way, and I think anybody can see there might be a potential for creating a turmoil and then make the values get lower. So I think there is a chance, and there may be interested parties who can do this.
Okay, thank you. trust and reputation has been mentioned in your interventions. When the financial crisis started in 2008, we saw what happened when the banks lost their trust. They didn't trust each other. The investors didn't trust banks, and then the customers didn't trust banks. So financial system is very much about trust. And you cannot, if you want to trust someone, the one you trust should have a good reputation. Because if the reputation is bad, then the question of trust might not be there. How do you see this in relation to cyber? Have we done enough? Has the financial sector done enough in order to maintain the good reputation and thus the trust? Samu?
Yeah, I think us being quite exposed to many industry verticals, so I think finance segment is definitely top of the line. So I think the banks and the finance institutions have done much better job in cyber and therefore in trustworthiness compared to many other industries. I think this trust is a very interesting topic. So when I talk about trust, I typically break it down to 3 different kind of subcomponents. First is that for anyone to trust you, there needs to be that integrity, that the other party believes that you are with best intentions. The second is very different, which is also a building block for trust. So the second is that whoever trusts you needs to believe that you have capability, so ability to deliver what you promise. And even if you would be with best of intentions, but if the other party doesn't trust that you can do what you try to do, there's no trust. And the last is what I would call like empathy. So that for anybody to trust you, they need to believe that the other party understands what is best for you. And in my opinion, all these 3 components needs to be in place. So there needs to be the integrity, capability to do what you said that you will do, and then the empathy that you understand what the other party expects from you. And breaking any of these will just destroy trust.
And when the other part is the institution having your money, keeping your money, then of course I think that these 3 elements should be there. Absolutely. Otherwise you should draw your deposits and find another institution which you could trust. So the trust in financial sector, it has many dimensions and many, in a way, stakeholders in that context.
Exactly. So even if the other party would believe that you have the best intentions, that you try to do good, but if you lose the trust from the perspective the other party no more believes that you can do it, so they don't believe that you have the capability, then you don't trust the other party, even if you know that the other party is with good intentions, but you don't believe they can deliver.
Yeah. So that's why the insurance companies have the solvency rules and banks have the capital requirements,
Exactly.
for example. Yeah. Now, question to central banks. There has been discussion and articles about digital central bank money. Are the central banks once, in a way, creating more risks and exposing the financial sector to this kind of cyber risks by fostering this kind of idea of digital central bank money?
Well, so the Riksbank has been rather active in communicating about the possibility of issuing a central bank digital currency. But the background is not at all that we want everything to be digital. It's more that we noted that this is a fact in Sweden and in Norway. All payments in Sweden are digital, and it's done today not in central bank money but in commercial bank money. Cash is not, well, there is still cash in circulation, but it's used less and less, and the infrastructure for cash in Sweden is not really well functioning. And we see a rather rapid change in how we pay and the use of cash. So I think it's extremely relevant for us to think about what is the role of a central bank facing this development. And one of the very important things that we struggle with is how do we ensure that the payment system is sufficiently robust facing this development. So one possibility is, of course, to try to take a step back and reintroduce a more prominent role for cash. That would be a rather costly step, and most people would not think that that's particularly efficient. In Sweden, almost everyone is happy with the new payment methods that are developing. So when we think about a central bank digital currency, one or maybe the most important aspect is the robustness, and can this contribute somehow to making the payment system more robust and more accessible also for people in Sweden? The answer is not obviously yes, and we have not decided that we will develop a central bank digital currency, etc. So those are things that we talk a lot about and try to analyze, but we don't still see the answer to this.
Thank you. John?
So I think I would agree a lot with what Martin said. I think this is really about effective electronic contingency measures. Now we can either make sure that the banks, the payment system, establishes a truly independent parallel payment system for contingencies. That is a very costly way of doing it, but it's possible. I don't think anybody are there yet. So far, basically most countries rely on cash as their contingency. There would be a problem if the ATMs don't work, I think. But still, if there's enough cash out there, you could base yourself on cash. We don't have that luxury. There's no more cash, basically, except in a few shelves and cellars. But the cash is going out of business, basically. So we need to think carefully about contingency measures. And I think central bank digital money is one possibility. It's not necessarily the solution, but it's something we need to investigate.
Okay, thank you. I think now is time to open the floor for questions. If our audience, who has been very intensively listening to your speeches and remarks, is there any question someone would like to state? There are microphones somewhere. I know someone is handling them. Oh, it's Jenny, yes. And when you get the mic, please state your name and where you're coming from, and then please state the question. And then if you want to direct your question to a certain panelist, then please state that also. Thank you. The gentleman with the red sweater.
Sorry, Hello? Yeah, good morning. Sorry, I think I stand out a little bit here. John Solomon from the FSISAC, all over Europe. Norway, I guess to the gentleman from Norges Bank, Norway, together with, I guess, the Netherlands, is the country that we often point to our European stakeholders as having gotten it right when it comes to private sector information sharing and collective response to building resiliency. What I see in what we see in a lot of countries around Europe is that, especially with the increased reporting requirements for critical incidents to various authorities, there seems to be more of a focus on interacting with public sector authorities, law enforcement, regulators and supervisors. How do you believe central banks, regulators, and supervisory agencies can encourage private sector financial services firms around Europe to work not only with national agencies and national entities such as yourselves, but also amongst each other to help build collective response and preparedness for various types of threats and attacks.
Please, John.
Okay, so thank you first for the compliment that I will not become complacent. I think we can't afford that. As I said, I do believe we need to establish fora that can exchange useful, rapid response information between authorities like central banks and the banking system. I think one such forum is the Nordic Financial Cert. And I think that is useful to have such forums that don't deal so much with the theoretical broad policy aspect, but really down-to-earth measures, rapid responses, seconds and minutes, not hours and days. That is important to increase our resilience. So that is one type of measure. I think another type of measure is actually within the current Tiber EU framework, red team testing. As the gentleman here said, practice, and across sectors, that is also important.
Thank you, Jan. Next question. Any volunteers? There's a... Yes, please.
Okay, I'm sorry for this delay. My name is Saša Črnogal. I come from Bank of Slovenia, Slovenian Central Bank. It was mentioned a couple of times that the important stream in the cybersecurity is being prepared to answer to the potential attack. I'm fully aware that you, considering positions you hold, you cannot deal with any detail. But still, are there any practical experience, at least, to what are key elements that are to be considered in this respect? And one very specific question for Ms. Nikkanen. I hope I spelled your name correctly. Mm-hmm. You mentioned that in Finland the backup payment system is being built. Is this meant to be interbank payment system being developed by Bank of Finland to cover all potential payments in case of a failure of other payment infrastructures? Thank you for allowing me to questions.
Thank you. Thank you. If I may start with the question regarding this kind of backup system for payments. In Finland, we have a national system which covers I think all critical industries in Finland. It's called, now I need to have help from my people because I don't know Huoltovarmuuskeskus in English. I think it's Service Security Institute or this kind of center who creates framework and contacts within certain industries to take care of this kind of contingency and functioning in exceptional circumstances. One area is financial. We have one for energy production, we have one for food production, we have one for construction and so on. And in finance, it's based on voluntary actions between the participants on the market. And in finance, we have that volunteer system and framework in place. But in addition to that, because there have been some issues regarding establishing this kind of common backup system on a voluntary basis, there has been a working group under the Ministry of Finance to establish, to strengthen the legal normative background for having this kind of system. So the working group under the Ministry of Finance has financed its work. They have written a report, and now it's in the legislative process, seeing in the ministry how that is going to do. So there are two dimensions. There's the idea of having a solid legal background for demanding this kind of system, and then this kind of network and a coalition of actors on different industries to create this kind of this kind of systems on a exceptional for emergency situations and long-lasting exceptional circumstances. You still remember the first question?
Yeah,
Samu, please.
I think I do. So I think you need to talk with your organization and just try to figure out, so what are your capabilities to do incident response and forensics, and how this is often very difficult for organizations is that they might be quite well equipped to first try to stop, and even if they have detected something, then how do you know that what you detected is the only thing that is a problem? So you, in the most severe cases that we've seen is that you don't in the beginning know which part of your infrastructure, your network you can't even trust. And the worst case is that the trust has totally gone, so the whole network, your IT environment has been taken over by somebody else, and then you see one sign of it somewhere, and then you isolate that part of your network, you think that's where the bad guy is, and then you think that you have dealt with the problem, but actually the bad guy is everywhere. So you need to have capability to do digital forensics, so also looking back, so how did this happen? Not only dealing with the issue at hand, but how did this happen? And often it is that once the issue surfaces, it actually happened like 100 days or 200 days or 300 days ago. So you kind of need a time capsule that you can go back in time to really understand what happened. And this ability most organizations totally lack.
Thank you. Jukka.
What if the payment systems fail, and what should central banks do? Coming from the approach that the whole intention may be to create political damage and political turmoil, I'm still, having not studied the topic very thoroughly, I'm still strong supporter of banknotes somewhere. Because if business halts for a few days or weeks, maybe it can be restored. But if people cannot do their payments to get the medicine and food, this will very much be, this will be weaponized in 3 days very seriously, politically. And I'll be very glad now to study the issue further with all of you, because Hybrid Center of Excellence will organize in October the aim is to arrange a bigger workshop on this part of the problematics. And most likely in May we would arrange with invited colleagues a kickstart seminar where we would define the agenda of our approach. And you are all welcome now to consider if you have such ideas that you would like to insert, and I'll be working through our colleagues in Finnish Central Bank in contacting you. Thank you.
Yeah, thank you. I think that you touched a very, very important point, that if someone wants to do harm for the society and create this kind of mistrust within the society, if the people start trusting that they can draw money from the ATMs, or they can get gas from the gas station, or they can buy food from the store, then that's quite basic. So in that sense, I think it's very important that the financial sector understands its role, not only providing banking services, but also having this kind of very connected role in this kind of very critical infrastructure. Thank you. I think that we have almost finished this panel session, but I think that Martin has a statement to make.
Well, just very briefly, I wanted to let you know that this conference will be organized also next year. So the first version of the conference was in Copenhagen last year and now here in Finland. So next year the Riksbank will organize the conference in Stockholm. The date will be almost the same, one day earlier, so November 28th next year. And we will provide information in due time, I'm pretty sure.
Okay, thank you, Martin, for your kind invitation. And I wish to thank all the panelists for your insights and also for the audience. I think that, thank the audience, I think that you have now reserved a half-an-hour break. So there is coffee and refreshments outside this room, and we will continue at 11:15. So thank you so far, and please come back at 11:15. Okay, thanks.
Welcome back to the second session of the conference. Next we will concentrate on the changing landscape of the financial sector and cyber threats. The first speaker of this session is Mr. Paul Barry. Paul is the Group CIO and Head of Group Technology of Nordea. Paul joined Nordea in February 2017 from a position as Global Head of Technology Delivery at Standard Chartered Bank Singapore. Paul has had several executive positions in large retail and investment banks across Asia and Australia. So, Paul, please, the floor is yours.
Thank you. Okay, does everyone feel better after the break? Yeah, I can feel the energy in the room. Thank you for having me today. You can probably tell by my accent that I'm Australian. And I'd just like to say that it's great being in a similar climate to that I'm used to back home. It's almost tropical weather that we're having today. Today, I'd like to share some future thoughts on banking service evolution, considering potential cyber threats. This won't be a deep technical discussion, rather a step back to help start the bigger conversation of what is important aspects around sustainability when it comes to new ways of banking, with the lens being on security. A little bit about me first. Like a lot of people, I'm technically curious. I've worked in banking and technology for most of my career, and I've worked around the world doing that. I love to understand how things actually work, separating new features and new trends from core technology. I've been learning about technology for all my life, and I continue to be reminded of two things. One, at the fundamental level, technology doesn't really change that much. And two, I still don't understand enough to label myself an expert. So if we can... As you can tell, I don't understand enough about technology. Is it on or? Okay, well maybe while we get that working. So I'll attempt to quickly cover the following and make the material as thought-provoking as possible. He's letting all the good stuff go. Okay, good? We're good? Okay. Thank you, sir. I'll start by sharing a couple aspects around our background as an organisation, just a couple of fun things that I think aren't well known in the marketplace. I'll share a couple customer areas where we're investing. I'll spend some time on open banking, fintech collaboration, and the new paradigm for cyber risk in a world where organisations interact with data through open APIs and data security becomes ever more critical. In many ways, data is the new money. We'll also look into the future with the potential opportunities and threats that may come our way. And I'll end up with speaking about collaboration and the importance of communities in cyber, something that we believe in Nordea is critical going forward. So, to set the scene, I'd like to introduce you to Nordea and some of our history. We started as a bank in the 1800s, and we are now the largest financial service provider in the Nordics, and we are one of the most stable banks in Europe. I have to say that because of our audience today. Sustainability and innovation is actually in our DNA. From introducing mobile banking to shipping, where we allowed sailors in 1986 to be able to do basic banking over a terminal in the middle of the ocean, to our investments in blockchain supported trade finance initiatives, and even more recently the success of our venture fund, Nordea Ventures, where we have helped to incubate some of the more interesting and successful startups in the Nordic region, and I'll share some of that later on. We are one of the main partners and supporters of Slush, understanding that we need to continue to help accelerate technology excitement and understanding across the Nordics, not just in financial services, but across all industry. We've been strongly moving towards automation and true back-end digitization, with millions of customer interactions now processed by AI and robotics. Nordea was the first bank in the region to launch open banking, our open banking portal, and since then more than 2,500 developers have registered to test Nordea APIs. And more recently, we can't share it now, but we're starting to see some commercial outcomes being achieved as a result of a push in this area. So we continue to invest in the customer experience supported by front-end and back-end automation. It's about making banking about you, everywhere and anytime without compromise. We have matured our infrastructure, process, governance to support new digital services, drilling down into PSD2, and something very relevant to this conversation. Our continued investments have allowed us to rapidly roll out mobile payment platform solutions which better suit our customer daily needs, such as Swish, Mobile Pay, Vips, Apple, Google, Fitbit, Garmin Pay, with Google being the most recently deployed payment service offering for our customers. Having gone through this learning curve with new payment offerings, learning how to best deploy e-services with strong authentication mechanisms, both our own and integrating with government-based systems, has made us highly prepared for open banking. Full digital authentication has allowed us to pivot towards code apps rather than physical, old-fashioned security solutions. What you know, what you have, and who you are, authentication. And some of the examples of automation that are positively affecting our customers' lives. Nordea Life and Pension utilises today machine learning and AI to significantly reduce the time to handle disability insurance claims from an average of 75 days now down to same-day handling. At the same time, we have also strengthened our fraud detection in this space, and we have noticed that the fraud detection has improved and the fraud rates have reduced with the rollout and ever-improving AI and machine learning capabilities in this area. AI-fueled chatbots, such as Nora, improve the speed in our interactions with our customers with ever-improved closeout rates, meaning the entire customer query is digitally handled to the customer satisfaction, and usually in a faster, more predictable manner, and obviously in a closed loop which is secure. removing humans from the interaction. Chatbot Nora reduced the time spent analysing on average 1,000 text message responses from 10 hours down to 10 seconds. In March, she had roughly 10,000 conversations with customers, and that number has increased steadily since then. Using what we've learned with Nora, we have turned that inward facing, and we have also, this month, launched Nova. And Nova is our internal facing chatbot, which helps employees share information and questions in a secure fashion through AI throughout the bank. It's a mechanism for us to help speed up the engine of the bank. While it's still too early to see a trend, Nova has been able to so far support 2/3 of all inquiries that have been rerouted to her, and the ones that haven't been able to be successfully catered for have been put back into a system for us to then analyse through the AI algorithm back into Nova, so that in the future she'll be able to handle those. This culture of going 360 digital has allowed us to embrace open banking, allowing us to view open banking not as an issue, but as an opportunity to grow and excel our business. Nordea's open banking portal gives people access to 11 million customers, the largest customer base in the Nordics. We built our portal with third-party risk management from day one. Open banking means moving to a security model where account data is protected from a security model where account data is protected in-house to through tightly held interfaces to a model where third-party providers have the right to access this data externally. Third-party providers can be anything from fintechs, other banks, or startups. This is an opportunity that comes with risks and changes the threat landscape significantly. The data value chain is becoming increasingly complex, and we'll talk about this later on in the panel discussion. We are continuously looking at new ways to protect customer data in this new value chain. Bringing in Nordea Ventures, we are looking further and leveraging our own open banking platform, so we gain experience not only as a provider but also as a consumer via the fintechs that we are helping to invest in and incubate. Tink, a financial service aggregator in Sweden, which allows customers to better understand what they spend and how that changes over time. Betalo, with Betalo you can simplify the way you pay your bills and send money domestically in Sweden or abroad. And Spiff, a social saving app with just a few keystrokes you can set aside money for a trip, a future dream home, or your pension. The paradigm shift from traditional very bank-to-customer relationship to an implicit trust by proxy model is challenging in open banking. In open banking, customer data travels through this complex value chain. Even if third-party providers have accountability for the information they handle in transit, rest, and use, a breach in this domain will inevitably mean a breach of trust of the entire value chain, including the trust relationship that the banks have built up sometimes over decades with our customers. Customers will most likely not be able to distinguish who is doing what in the background. And in the end, everything from customer support, fraud cases, and liability claims can end up with the bank. The industry must adopt a shared responsibility model and countermeasures along with this value chain to ensure that customer data is always protected to the highest standards. Banks and regulators need to work together ever more closely to ensure data protection standards continue to evolve well ahead of open banking commercial models. And some of the forward-looking things, which is really more of a thought bubble, but hopefully to start the conversation, areas potentially like secure data bundling as a countermeasure could mean that we invent a new industry standard around data handling leveraging crypto versions of local currency, however bound with customer data. A customer's money and data protected along the value chain. Data DNA. Think of this as technology that allows the microdotting of customer data. Similar to the car industry used microdots in their paint to stop rebirthing of cars. This could help in tracking and deterring hackers and future attackers. Knowing the weak links in the value chain. Along with the adoption of crypto standards, a blockchain mechanism to track and identify security breaks in the value chain will also be needed to be developed by the community of banks and regulators. And if we bring those things together with some intelligence, AI to the defense, the future is morphing threats. The banks will need to respond via machine learning and AI to leverage crypto and blockchain standards mentioned previously. This simply is a function of the fact that in the future, humans will not be able to adapt with static controls as we have today to be able to keep up with the rate of morphing security threats in the value chain, which could lead to new commercial opportunities. Defense as a service, smaller third parties will most likely need to leverage banks' data protection and fraud detection networks to ensure rapid response to any security events. Our goal should be to autonomously detect, respond, protect, and if needed, notify customers that their data is secure. And there was a discussion that was raised a little bit earlier in today's thoughts around what would happen in a systemic attack across the whole financial system. Flashback and rollback of financial systems. Markets have had the ability to wind back trades for years. Maybe it's time now to develop a standard and technology to flash back entire banking networks to investigate threats, or in a worst case scenario, be able to roll back entire banking networks to a point in time to then deter would-be state-sponsored attacks. But before we get to that, we need to cover the basics, and the basics are, we think, two main things. One, sharing. Further sharing of threat intelligence across the financial industry, unifying our security borders, support and educate our third-party providers in the value chain by delivering not only quality APIs, but also excelling in documentation, examples, and communities beyond what's legislated. We need to help our third-party providers build more secure solutions by engaging and educating them. Compartmentalization. Focus on segregation of components. For a long time, perimeter security has been a challenge, and with open banking, it's now a bigger challenge. Ensuring that third-party providers' access is tightly controlled helps mitigate damage. If they are breached, we need to make sure that we can react and limit the consequences of those breaches. So in summary of this section, which is a little bit long-winded, but it's about trust. As a bank, we are extremely dependent on the trust relationship we have built with our customers. The new open model distributes the trust relationship between our customers and that of our third-party providers. We run the risk of losing that trust if a third-party provider fails, either in their security or even something as simple as the service that they provide the customer. Third-party providers, the core challenges lies in the disruptive nature behind the idea of open banking, granting outsiders access to core customer data, opening up channels in our lines of defense, and letting our customer data out to the wider domain is something that we need to constantly work on to improve the security model around. And information security in general, open banking builds on existing underlying technologies. Open APIs are nothing new, neither is security controls around them that support open APIs. We need to make sure that we continue to evolve in that area, and we work as a community to set new standards that meet the expectations of our customers going forward. Can you click next? That one there? So if we look past the horizon, and again, this is a thought process for us, open banking provides the future highway to accelerate financial services and innovation around them. If we continue with the analogy of the highway, we should learn from how the advent of the first highway led to completely new services, i.e. the truck stop, the highway petrol station. Biometric banking leveraging voice. The obvious cases here are in-car and personal assistant banking, but the threat being here is new potential ways of identity theft. If anyone has seen, there is a company now called Lyrebird, and they have launched an AI-based voice cloning service. So you can go on the web and you can clone your own voice. It takes about 30 seconds, and it's highly accurate. There's a recent documentary on this actually in the news. AI voice cloning is earmarked to be about $1 billion industry in the next 5 years, and the ramifications of this do not just impact new banking services, but it also impacts traditional banking services as well, when you think of telephony, telephone banking. Much like robo-advisors are increasing in popularity in investment management, the same technology can be used by criminals. AI and machine learning can be used in the future to effectively target victims by studying data patterns and matching those to vulnerable personas that they deem to be easy targets. Trimming down the attack vector greatly reduces the chances of the criminal getting detected. And much like virtual reality will take off one day, the idea of a virtual financial me could be used for people to help accelerate investments well into the future, sort of a sliding windows approach to investing. This could lead to customers making investment decisions based on nothing more than future simulations, which if done at scale could lead to a new type of financial crisis. Cyber criminals could infect these virtual scenarios to effectively control future market movements. The last one shared, and by far the most threatening idea, is of a weaponized state-sponsored fintech. The idea that a state-sponsored fintech can develop trust and access to Nordic banking services over years, and then at some point be activated to wreak havoc in the event of a political event. Weaponized fintech, something that we need as an industry to anticipate. And we touched upon this in the previous session, the importance of community. And this is what I'll leave you with. Legislation can only take us so far. We must, as a community, make sure that everyone in the value chain is committed to the protection of personal data and the financial system as a whole. With the advent of the Nordic Financial Cert, we make sure that cyber defense community remains an important cornerstone in mitigating cyber risks that lie in how the bank industry is changing with open banking. Cybersecurity coordination and response to incidents are two key areas that we see the community needs to come together and strengthen the overall fabric of financial services across the Nordics. There is need to increase collaboration, information exchange, learning from past incidents, and creating circles of trust. Without this collaborative approach, we will not be able to evolve quick enough in order to counter developments in the security landscape. Much like hackers exchange information online via open forums, we need to do the same amongst our trusted community, bringing together along third-party providers and driving fintech innovation from the realm of the fringe benefit to that of the core banking as we know today. We as a whole need to drive practical adoption of secure crypto, blockchain, AI, machine learning, as these will replace traditional banking infrastructure, i.e. middle and back office services. Digitization will be driven by more security in the future than it is today, and a deeper appreciation of this will only ensure that the industry is better equipped to deal with the threats of tomorrow. I'll leave you with this quote from Heyman, and it speaks, I think, very much to the core values we as an industry need to think of. And as Nordea, we believe that we make decisions for the future, not for today. And I thank you for your time today. And that is sustainable banking. Thank you.
Thank you, Paul. I think it was very interesting when talking about open banking and third-party providers. You also touched on trust.
Yes.
About the integrity, capability, and empathy, knowing that the third-party providers are the ones with good intentions, wanting to do the best for you. Okay, thank you.
Thank you.
So, thanks, Paul. And our next speaker is Martin Noreus, Deputy Director General from Finansinspektionen, the Financial Supervisory Authority of Sweden. Since January 2017, he is also Executive Director for the Banking Department. He is a member of the European Banking Authority Board of Supervisors, as well as the EBA, that's the abbreviation of this European Banking Authority, Management Board. Martin joined Finansinspektionen as head of large bank supervision in 2009. Before joining Finansinspektionen, Martin worked as a senior advisor in the CEO office of SEB. So you also have commercial banking background. Welcome to this conference. The floor is yours.
Maria, let's see if the technology is working better for me. And thanks for the invitation to speak here today. It's a real pleasure to participate in this very important and timely conference. But I need to sort of state a disclaimer or warning, because I'm not really an expert on cyber or financial technology. So what you will hear now is purely from the sort of perspective of an economist and generalist supervisor. But I will try to do my best. So I will first try to put cyber security or cyber supervision in the context of digitalization in the society. And then I will move on to talk a bit more about the risks and what we do as supervisors. So digitalization, as we've heard today, and we all know about this, is clearly increasing very rapidly across the whole world, and also, of course, in Sweden. And one can debate, of course, if how important is digitalization? Is it as important as industrialization, for example, in the 1800s? And most economists still sort of doubts that. But everyone agrees that it's a very important transformation that touches upon almost all aspects of society and how we interact socially and economically, and all kinds of things we're doing in our sort of everyday life is impacted by this big process. And we are in a very interesting stage, because we had the sort of dot-com boom, the internet revolution of the 90s, and so on. But still, even 10 years ago or 15 years ago, digitalization was something that more of a tendency or a trend that we talked about, and was referred to as sort of something among early adopters. While now it's really mainstream. Everyone is impacted by digitalization. My parents or grandparents, they're also impacted by this, whether you want it or not. It's there. And of course, it's also transforming and impacting financial services very much. So everything from distribution of financial services to the content of financial services, and perhaps even more importantly, the expectations of consumers and customers of financial services. Everything is changing because of this. And in Sweden, to be a bit more concrete, the most visible and dramatic, I think, example of digitalization in the financial sector is really in the payments area. And my colleague from the Riksbank, Martin, alluded to this earlier today, because now, today in Sweden, And also in many other countries, I think the Nordic region in general is way ahead on this. But in Sweden, payments are now mainly digital. And a vital and very important sort of enabler of this change has been the widespread usage of something called Bank ID that many of you here are familiar with because you're Swedes or you live in the Nordic region. And Bank ID is really a sort of digital authentication or signature solution that was developed by the large banks and is still owned and controlled by the large banks. It was a tool just basically to be able to log in securely to your internet bank. Today, Bank ID has something like 7 million users in Sweden of a population of about close to 10 million. And only this year, there will have been made something like 3 billion authentications through this tool. So usage is really widespread. And I don't know if you can see it from this chart, but if you look at, this is how sort of usage looks across different age categories in the Swedish population. And if you look at sort of 21-year-olds to 50-year-olds, it's about 95% of Swedes that use this tool. And even if you look at sort of slightly more senior citizens, 51 to 70-year-olds, it's about 80%. And then it drops off usage in older ages. But it's still very widespread and it's used sort of intensely. So what this means, it really provides a standardized tool or platform on which all kinds of financial services can be based, including, of course, payments. And in Sweden, we are really quite rapidly moving to become a more or less cashless society. So these charts are based on Riksbank statistics or a Riksbank survey. So in the left-hand chart, you see the responses to the question, which means of payment have you used in the past month? And 61% of Swedes today say that they have used cash. So it means that 40% of Swedes have not used cash in the past month. And it also says that about the same amount, 62%, have used instead something called Swish. And Swish is just the sort of mobile phone payments app that is based on this solution, Bank ID. So actually, at this stage, slightly more people are using Swish than cash. And as you can see on the sort of the stacks here, the change is dramatic in only the couple of last 3-4 years. So we're really at a turning point in terms of this. The right-hand chart shows the responses to the question, did you use cash for your most recent purchase? And as you can see, in 2010, just 8 years ago, it was close to 40% that had used cash for their last purchase. Now in Sweden, it's only 13% that have used cash for their last purchase. So it's becoming more and more rare to use cash, and this is a really sort of visible and concrete change in Sweden. Personally, I almost never have any Swedish krona or any bills either. On me. I almost never withdraw any money, only when I go abroad, particularly to Italy, where my wife is from. The only time I withdraw money is when I have to pay my 10-year-old son cash for some small jobs that he has done, sort of picking up his little brother from school or cleaning his room. Then he prefers to be paid in cash. I don't know if it's because he's suspicious of electronic or commercial bank money, but he definitely thinks it's more fun or exotic to be paid in cash. It feels a bit special, probably. I think it's worth noting, despite all these sort of dramatic numbers, it's worth noting that there is a phenomenon here that we need to take seriously, which is digital exclusion. So even in Sweden, there is a part of the population, it seems like everyone is online, But even in Sweden, there are estimates saying that some 500,000 people are actually not online, or at least very seldom online. So that's 5% of the population. And of course, for these people, it's becoming more and more difficult to access and to use financial services. And actually, the majority of complaints that we get from consumers at the Swedish FSA is precisely about this. It's about customers being frustrated that they cannot pay their bills physically, that they cannot visit their branch, and so on, that they cannot use cash in many stores today. It's difficult to use cash. Many stores refuse to take cash, particularly cafes, for example. So this is something that we still need to be aware of and need to manage in society, even though the vast majority of consumers clearly are embracing and appreciating digitalization. And this fact that we are moving to digitalization of financial services and payment services, of course, creates a dependency on this digital technology. So, for example, if a service like Swish goes down technically and is unavailable, that really has an impact today in Sweden, because almost all person-to-person payments are done through Swish. And also many small businesses and merchants are using Swish, like dry cleaners, hairdressers, street vendors, and so on use Swish. So this is becoming a part of our infrastructure. And the same goes for this solution, Bank ID. As I said, it started just as a way to log in securely to your internet bank, but it caught on and people found other uses for it. So now something like 4,000 services are using Bank ID as the sort of identification and authentication tool. So we have many authorities use Bank ID, the Swedish tax authorities, for example, healthcare providers, school systems, and of course, lots of financial services. So it's really becoming a very important tool in Swedish society, much sort of more widely used than just for financial services. Yeah, that's more like a background picture, supposed to create a sense of fear and seriousness, I suppose. What we have here is basically the observation and the assessment that dependency on digital technology in the financial services is clearly increasing. So if this technology fails or doesn't work, this may have serious consequences for society and for financial services, clearly. And given that, it's of course concerning that we and almost everyone else that is trying to assess this assess that the risk of cyber attacks against banks and other financial firms is increasing. And this is, of course, both due to the fact that financial services are more vulnerable to these kind of attacks. So it's much more tempting for anyone to make such an attack today than it was perhaps 15 or 20 years ago. But also the general assessment is that these so-called threat actors are becoming more and more capable all the time. So they're fully able to sabotage, manipulate data or steal data or commit large-scale fraud. So this is a very live threat to the financial industry that we see today. And at the same time, the banks and many other financial firms are under very sort of high pressure to digitalize their operations and to take part in this sort of innovative process. They're clearly, most financial firms are very sort of fearful of being left behind in this quite rapid development. And at the same time, many financial firms and banks are struggling with old IT systems, which is a sort of legacy from the past. So they need to renovate and to replace many systems. Many firms are also relying more and more on third-party suppliers and making use of outsourcing to because there are obvious benefits to cost and efficiency from this. But all of this is creating a lot of complexity in the IT environment of financial firms, and complexity creates operational risk. And particularly, risks are high when you are in the transition from something old to a new and different setup. So what does all this mean for supervisors? Well, first of all, I would like to agree with many of the previous speakers saying that cybersecurity is slightly different from many other risks that we're dealing with. We think that there is even more of a common interest here for both regulators and the industry. Cybersecurity and information security is really about sort of the underpinnings of the infrastructure. So we think that in this area there should be, and we hope so, that there is a bit of a more scope for a collaborative approach also in supervision and in regulation and between the banks. And we certainly try to cooperate with other authorities, particularly with various branches of the police and also with intelligence services, who tend to be much more knowledgeable than we are about the various threats from cyber threat actors of different kinds. We also have as an ambition to increase cooperation with the Riksbank, the Swedish central bank, in this area, which is clearly a very important stakeholder in all of this. In terms of supervision, cyber risk is ranked among the top in when we do our risk assessment. So this means that we are constantly trying to increase sort of resources into cyber supervision. But here I have to admit that this is really challenging for us. As a supervisor, we have our sort of traditional strengths in sort of economics, audits, financial risks, and many of us are also lawyers. But we tend to be much less knowledgeable about technology risks and threats. So this is a struggle for us to recruit in this area and also to keep talent in this area. And I think this is a struggle also for many banks at this point in time. So regarding the banks then, we clearly see that banks are or they have increased their focus on these risks a lot in recent years, let's say in the last 5 years. And the awareness of these risks is much higher today than it was before. And this goes also for sort of board and senior management levels, so that's something positive. And we also see that many banks are investing quite heavily in various programs to try to come to grips of these risks and to try to improve their protection against attacks. But clearly, a lot remains to be done. So I will just send a couple of broad supervisory messages that we're sending to our firms in Sweden at pretty high level. And these are 4 different messages. So the first one is really that information and cyber risk management need to be structured and based on a firm method. So it cannot only be sort of based on various individual efforts in sort of different segments of the operation, but it needs to be a much more comprehensive and long-term and continuous approach. And to make that happen, you really need to have a very strong support and engagement at board level and in senior management. Otherwise, it will be more sort of one-off initiatives taken by individual employees or teams. Firms also need to be better at continuously assess and analyze threats and the various actors behind these threats. It's not enough to do a sort of yearly risk assessment exercise, but you need to be much more operational in your monitoring and in your management of these risks. And in this respect, we see a lot of scope here for the banks and other financial firms to to really try to share more of cyber threat data. So we know that there are these initiatives that have been taken and we're very positive to them, but we encourage even more firms to join and to also increase this sharing of risks and threats. Financial firms also need to be better at identifying the key assets and systems in IT that are really important, and the interdependencies between these systems and other various functions. And this may seem completely obvious, but it's not that easy in practice if you have a very fragmented IT environment. And this is crucial if you are to be able to spend your scarce resources in the right spots. You need to know your real weak spots and the various interdependencies. And then the fourth message is that we think that firms should focus much more on third-party risk management. So we, as a regulator, we clearly recognize the great benefits of being able to outsource and to rely on third parties. There are often very strong business cases in terms of costs and efficiency and also quality by using third-party suppliers. And many fintechs in particular are almost completely dependent on being able to do this. But the firms and the industry need to be aware of the risks. And I think this is partly our fault, because I think the dialogue and the interactions between regulators and firms in outsourcing often becomes very sort of a lot about compliance. We're trying to define whether something is outsourcing or not, and then we're discussing how this should be reported and what we as a regulator should think about precisely this item that is being outsourced. But the discussion, and I think the firm's focus, really should instead be about risk management, because that's why we're regulating this to begin with. So to spend much more time thinking about what does it mean when we outsource this? What does it mean for our data and our systems? And if we put them into someone else's cloud, how will this data and how will these systems be protected in that cloud? So that's where we would like to have the discussion instead. And then, of course, there are regulations and there are compliance, but those are just sort of necessary things that need to be in place, but it's not sufficient to have just compliance to reach a good level of risk management. So to conclude, digitalization clearly has enormous potential for financial services. So we as a regulator are sort of fundamentally we're positive clearly to this change. It has huge benefits for the financial industry, but more importantly for all consumers and firms that are relying on financial services. But it does create a new vulnerability, clearly. And it means that information and cybersecurity is becoming more and more important. And it really already is of critical importance. So we are trying to sort of step up our game and spending much more supervisory resources on cyber risk. But we need to be humble and say that this is really just the beginning and we're learning a lot. And we have a very interesting journey ahead of us. Thank you.
Thank you, Martin. It's a bit sad to hear that cash is no longer king in the kingdom of Sweden. But I'm happy to hear that because of your wife, I think you have still euros in your pocket. So you are part of the Eurozone in that sense.
That's true. That's true. Lots of euros in my pocket.
Yes, okay. Thank you, Martin, and please have a seat. We will continue now with our second panel discussion. And I welcome the moderator and the other panelists on the floor. First, Hanna, please. And then we have Rannveig, Sigurdardottir, and Hugo Frey Jensen. Hanna Heiskanen, our moderator, is a senior advisor on digitalization at Finnish Financial Supervisory Authority, the FinFSA. She manages FinFSA's projects and initiatives related to digital transformation and financial innovations. Hanna joined the FinFSA in March 2017. Before that, she worked over 10 years in technology industry, for example, at the Finnish National Cybersecurity Center. Then we will have Hugo Frey Jensen, governor at Denmark's Nationalbank, having started at the position in April 2011. Denmark's Nationalbank has established Financial Sector Forum for Operational Robustness, EFSOR, and acts both at the Secretariat and the chairman of the board. Hugo is also chair of Nationalbank's Risk and Security Committee, which governs Nationalbank's cyber and IT security strategy along threats and risks to central bank associated with the cyber and IT security domain. And then we have Rannveig Sigurdardottir, Deputy Governor of the Central Bank of Iceland. She was appointed in a post in July 2018. From 2009 to 2018, she was the Deputy Chief Economist and Deputy Director of the Central Bank of Iceland's Economic and Monetary Policy Department, as well as serving as Secretary in the bank's Monetary Policy Committee. So we will have the same setup as we had with the first panel. Hanna will first let Hugo and Rannveig to give the first remarks, and then you will continue with the discussion. The floor is yours, Hanna.
Yeah.
Thanks.
Thank you, Maria. Thank you, Maria. Is the mic on? Thank you, Maria. Yeah, now the mic is on. Welcome also on my behalf to the panel. Happy to be here. The theme of the panel is cyber threats in the changing landscape, how to combine new players into the financial infrastructure in a secure manner. And working for the FSA, we surely see how the landscape is changing. We are continuously meeting with our supervised entities, banks, insurance companies, payment institutions, investment firms, etc. They are introducing us their plans on renewing their IT. They are thinking about cooperating with technical providers regarding outsourcing, even to the cloud. And they are cooperating with third-party providers, such as fintech companies. But we also see the change of the landscape in the way that the fintech companies are approaching us. Our main channel to engage with the fintech community is our innovation hub, which is called the Innovation Help Desk, through which we meet with fintech companies who are interested in providing services in the Finnish market. And we also have clearly seen the growing interest there. For example, this year, already in May, we had more inquiries to the FinTech Help Desk than in the last year, in the whole last year, so there is a growing interest. And in the coming years, we are going to see new operating models and new actors in the financial sector. And the first question and the opening remarks are related to that: what challenges do you see in the changing gaming field in this sector? We could start with Hugo first.
Okay. Thank you, and thank you for the invitation to speak here today. I think it's important coming from a central bank and stating what is our perspective, and that is always the systemic risks and what are the systemic risks and what is the risk for financial stability. We are not so keen on single operators or following each new entrant. The way we have tackled systemic risks with respect to cyber is a couple of years ago we established, as was mentioned in the introductory remarks, the Financial Sector Forum for Operational Robustness. And I must say that has been a very good experience in the sense that the willingness to cooperate with the financial institutions and the authorities has been very strong. There is a strong common interest in working together on cyber risks. And we have achieved some important results. We have established a crisis management setup. We have conducted tests of the setup. In the coming weeks, we have agreed and will start to run a red team test program with the entire financial industry. And we have also done a comprehensive mapping of most of the critical businesses, activities, processes and systems and financial sector participants. And this mapping has helped shed light on the interdependencies in the financial system. And some of the conclusions is when we look at new players and newcomers, this is basically, and that has been mentioned earlier by many of the previous speakers, that it's not so much the fintech and the new entrants in the sense that most of them don't have direct access to the financial infrastructure. So they come in through the traditional channels, and the traditional channels and the banks that have access, they are regulated the way we regulate them. And if a new entrant wants to enter directly into the financial infrastructure, they will have to follow all the rules that follow from that perspective.
And so far we haven't seen much from new entrants with direct access to the financial infrastructure. What we have discovered, and many have said today, is that there are some old players in the sense of the service providers. There's quite a lot of concentration risks when we look at the mappings. So many players use the same service providers, and that's probably a key issue. And probably also the new fintech entrants will also use the same service providers. So that's a focus area. Then what do we do about the new players, and are we worried, are we concerned? I would say from the perspective of participation in the financial infrastructure, direct participation, I think we have the systems in place. But of course, if the entire Danish society start to withdraw all their bank deposits from the Danish banking sector and deposit them in a complete new system that is not part of the Danish infrastructure, then there might, of course, be risks to financial stability and trust. And so we monitor carefully what is happening. What are the new players? What are they doing? Are they gaining market share on a large scale? And then we have to worry about it, even if they're not direct participants in the financial infrastructure. And that's of course something we monitor very carefully.
Yeah, thank you.
I don't know.
Thank you, Hugo. And yeah, we could move on to Ranveig with the same question: that what challenges do you see in the changing gaming field?
Let me just start by thanking you for inviting me here. Like Maria said, I've only been in office for 5 months, and coming from the Monetary Policy Department, cybersecurity has not been on my agenda before. So I will more speak like Mrs. Newcomer here. I don't know if any of you have moved to the States, but when you do, you get endless phone calls asking for Mrs. Newcomer. But this topic here that we are discussing is very important for the Central Bank of Iceland, all the central banks, and of course all of us here. That's why we gathered. It's creating challenges, new challenges for central banks at least, because both for supervising the financial sector in general, and also for central banking specifically. I was at a conference at Danmarks Nationalbank last week, very interesting on macroprudential policy. And the discussion paper for that conference was called While the Sun is Shining, Prepare for a Rainy Day. So I sat there pondering what would the discussion paper, if there were one, for this conference be called. The snowstorm is here. What do we wear? I thought that was a little bit pessimistic, but after the first lecture this morning, I thought maybe it should have been the hurricanes here. But we know that cybercrime is the world's fastest growing crime, and it is shot up to a second place on a list of top 10 risks for businesses in the world. And 5 years ago, it didn't even make that list, so it's growing really fast. And the financial sector is, of course, a very important business because it greases the wheels of our economies. Cyber risks do pose, as we have heard before, mounting risks for the financial systems. That's why we're here today. And the question you asked, so getting to that, finally, I mean, as I say, the storm is here. The new challenges that we are trying to tackle is new players. What are they? What techniques are they using? Is it established? Is it new? Do we know anything about it? And also, with these new players, as we know, attitudes do matter. Attitudes to risks and operational risks and security matter. But with tech firms rushing to offer new products on the market, there is a risk that the insufficient emphasis will be put on security. Also, and this is a risk that we must monitor, not only for new products and new players, but also for incumbent companies. And we also know that tech giants are here, and they look set to become the dominant players in the field. They're already in the Nordic marketplace, and this development may lean towards monopoly because it can create entry barriers for new and small companies. And if that was to happen, it will be also bad for competition, and it will go against, for example, the aims of the PSD2. So the challenge for supervisors like us is to keep maintaining the comprehensive overview of the market. And for the legislator, as we know, it's a challenge to stay on top of rapid technological developments. As we know, law and the rules usually lag behind technological changes. And as I think everyone who has opened the mouth this here today has said, cooperation is what really will help us on our way forward. It is, and just to end on a positive note, we know that all systems can break, and that is probably the reason that we are still using paper money, although they are not the most sophisticated technology that we have. But security has been improved over decades, and we can only imagine what the topic would have been at a conference in Florence at the times of the first Medikis. And as with paper money, I'm sure that the technologies that we are discussing here today will become more secure, although we will encounter blizzards. And our role, at least as central bankers, is on the challenge is to prevent, or at least try to reduce the likelihood of such blizzards creating systemic risks. So, Mrs. Newcomer has spoken.
Thank you, Ranveig. And already in the previous presentations, we touched upon interdependencies and also concentration risks. And the theme we would like to talk a bit more about is complex value chains. There are often several service providers involved in offering a single digital financial service. There are subcontractors and even subcontractors of subcontractors. And there is also a growing interest in outsourcing to cloud. So in your opinion, and as also a follow-up to the comments here, what in your opinion are the largest challenges of these complex value chains? Who would like to start?
I can start. So I think, well, first of all, for the firms, clearly when you increase complexity, you risk losing control. And I think for many firms, and I know also authorities that are contemplating outsourcing, it usually starts with management and board being unhappy about the internal IT department. And then you start thinking about whether you could outsource something and get more efficiency and quality into that service. So I think for senior management, there's always a risk that they will sort of think that problem solved when something is outsourced, and then it stops there. And I think the challenge here is really to understand that outsourcing also requires lots of engagement and lots of skill and analysis, and it's really a continuous sort of interaction with your third party, and that's what we're trying to push against the firms, because now we see that still, even for large banks, it can be treated more as a sort of one-off exercise, and then it's outsourced, and who knows what happened next. And we want it to be a much more continuous assessment going on, and a much more sort of engaged discussion also strategically around this. And then for regulators, I think this is a challenge in many ways, because first of all, we struggle to understand sort of just technically and functionally where risks are. So who is really in control of the risk? So of course we always remind the financial firms that they are always responsible for their risk, even if they outsource it. But for us to understand where, how those risks should be risk managed and controlled, that can be a big challenge. And when we have different financial firms taking different parts of the value chain, we also often have very sort of fundamental debates. What financial service is this small firm actually providing? Or is it a financial firm that needs a license? Or is it just a technology provider? So for many of the fintechs, the challenge for us is really to sort of fit these firms into our standard regulatory toolbox. Is it a payments firm? Is it a financial advisor? Is it an intermediator? Is it a financial sales? Or is it just, an IT third party? And those discussions and assessments can be very difficult and almost philosophical.
Yeah, maybe I think this is a very interesting point. Where does the responsibility lie? Because you cannot outsource the responsibility. And I don't think we have really an answer to that. But I was thinking maybe, like they're trying to do on the labor market, when they're trying to counteract underbidding there, making a chain responsibility that those who hire undercontractors, they are responsible for the security all the way around. That's the solution to all our problems.
Hugo.
I think this is a This is, I think this is quite complex because sort of behind it lies some very sort of traditional ways the market economy is working. Division of labor is crucial. We have quite a lot of products where it's evident that it's a scale business. So it's very, very complicated to insist on doing everything yourself in-house and get the right quality. So in a sense, our whole society is based on division of labor. So what do we do? Yeah, I think, as was mentioned, be aware of the risks, consider the risks, and then when you look at it from the systemic perspective, are there some externalities in this process that goes beyond what the individual firm thinks is most efficient, and how do we as authority then solve that problem, or what requirements do we set up? And that is not only sort of when looking at the financial system, but it also goes in within authorities themselves as how do we build, for instance, a Danish RTGS system for a country with 5.8 million people at a level that is sort of best in class, best in world, or fulfill all requirements. That's quite a task to do that cost efficiently if we cannot use external contractors. So this is, I think, you have to sort of aware and work with the risk and think what are you doing, and then at least what our mapping exercise showed us with the Danish financial system is you end back with the vulnerabilities with the third party service providers, but there's quite a lot of concentration there.
I'd just like to add, I think sometimes we think being on sort of the side of the financial service providers that have to manage this risk, we also forget about the economic opportunity if we get it right. If we get it right, which means being very, very close to our third-party providers, which means understanding exactly what they do and what service provide, their strengths and their weaknesses, we can then commercially exploit the relationship to the betterment of ourselves and our customers. A lot of times banks see it as an extra burden to have extra third-party risk management processes in place. They would just like to throw it over the fence and get on with their quote-unquote core business. But from my standpoint, it is about engaging with the third party, because when you do, you usually see opportunity that others miss out on. So I think there is a great commercial opportunity as well as risk management as a side benefit of that. The two things can actually coexist at the same time.
Yeah, thank you. And moving on to the second theme, meaning that the banks are currently building new interfaces. They are opening these interfaces to third-party providers such as payment service providers and account information service providers, which come along with the second Payment Services Directive. But some of the banks, they go even further. They open their interfaces also to other actors. But first of all, Paul, since you work in a commercial bank, and how do you think that you can ensure the safety or guarantee the safety of these new interfaces when you're opening them to the third parties?
I think guarantee is a strong word, and I think that we would never tell ourselves that we would be able to guarantee safety. What we should be doing, though, is making sure that we use tried and tested best practices and try not to reinvent the wheel specifically for ourselves. So leverage the community, leverage the greater thought and capability within our region or globally around what is best practice. But even the best of practices sometimes fail. And for us, it's important that we really focus our capabilities on being able to respond. And I mentioned a little bit briefly in my presentation. We need to be as proactive as possible. We need to make sure that we build a culture around security awareness within the community and within our organisation as well. We need to have capabilities to be able to early detect, stay up to date with trends, and provide rapid mitigation. I will share a story that was mentioned before in the previous panel around Maersk and NotPetya. When that happened, I was in Sweden, and I was in a meeting, and I got a call from a junior technician, lowest level in the bank, and they called me directly, and they said, "I think that there is a problem with Maersk." And that's all he said. And I was in an important meeting, and I said, "Well, what do you mean?" He goes, "Well, one of our security, because again, we were building up the Nordic financial cert at that point. He said, one of my security friends has just been told to come into the office and hand in his laptop." And again, it's not enough information, so I stepped out of the meeting. I said, "Okay, well, what does that mean?" And he goes, "Well, I think it's really strange because he's really good at his job. And I'm going to find out more. Can you stay on the line?" And I go, "Okay." So I stayed on the line, he called up, and another friend of his in there said that he was also called in to hand in his laptop as well. And he goes, "Paul, I think we are experiencing some kind of cyber attack in the industry." So we quickly called up some of the experts that we knew in other companies, and before it was published in the news, we knew what was happening in general. We didn't know who was affected by it, and we immediately froze all production changes. We had been rolling out patching, Microsoft patching, for a period of months up until that point, which one of the vulnerabilities was covered in this. We had about 10% left, and we immediately stopped everything we were doing in the bank, and we created a war room, and we rolled out the patching over the next 24 hours. And if it wasn't for that community response, that security awareness, and I would like to say a little bit of the Nordic culture, where Danish, where he feels comfortable, he can call right up the chain. Anyone can call to raise an issue. That we wouldn't have been as protected as we could have been. So I think it all starts with that security awareness, the culture within the organisation, and the wider community around protecting our global financial services sector.
Yeah, I agree, and totally also agree with the Nordic culture of sharing information when there's something happening coming from the National Cybersecurity Center. We also had the Nordic colleagues we could call when there was something happening. And reflecting to the opening of the bank's interfaces to third parties, these new financial services are built both by incumbents but also by fintech startups, and also product development life cycles, they are getting shorter, and there's clearly also competition on who will enter the market first. And particularly now, turning to Martin, since you work for the Swedish FSA, so in your experience, what can the authorities do to safeguard the new financial services, especially those who are provided by the new entrants?
Okay, I can just quickly comment on this sort of this issue of banks having to establish these APIs or open channels with the third-party providers. I think in general, of course, this is another example of where you increase complexity in banks' IT environment. But in general, we are still positive to the sort of the PSD2 requirements, because these third-party vendors or suppliers or firms, they were there before. And they used other methods. In Sweden, it was very common that they logged in via the clients into the internet bank, and there they sort of screen scraped the information. For example, that was a standard procedure, and that of course creates lots of security concerns also. So we think that this is still this clearly creates some risks, but it's. I think overall we're still positive, and these firms will also be regulated now in a clear way. So I think there is potential here to make this work. But it's a very interesting, PSD2 I think is a very interesting regulation because it's coming from a different perspective. It's not about financial stability really, it is about trying to, in a way it's about enabling other firms or new players to enter into the market and to sort of loosen up the bank's monopoly on very crucial customer information. So it's almost like a competitive regulatory measure.
And to encourage innovation also.
And there is some tension there with financial stability, but I think it will be very interesting to see where this leads and how it will impact strategically on the banks. And it's very interesting to see sort of the Nordea move to sort of go for open banking, and it will be interesting to see the different sort of strategies chosen by the banks, how they want to interact with third party. And then your question was, what was it more specifically about?
Authorities' role in this, but kind of you mentioned also that you are involved in the license process, and probably there you take a look at the operational risks quite actively.
Absolutely. So one thing you mentioned production cycles and op risk. So this is something we see quite often now when we look into the so-called new production approval, new product approval processes that banks are required to have in place from a sort of traditional risk management perspective. And in that space, what we see is really one of the main risks is, of course, IT and cyber, because when you roll out a new product, it's always based on a digital solution nowadays, and that development can be very fast. And we see particularly with some of the smaller players, the fintechs, and some of the new small sort of niche banks that work more like technology companies, that they have there the culture is much more also of a trial and error, so it's sort of okay to start selling products that are not perhaps you've worked with different versions, you have a beta version and 1.0, and you don't expect everything to be perfect to begin with, which is a different approach than traditional financial firms or what sort of regulators are used to be seeing. So this is an area where we also try to focus a lot.
Yeah, thanks.
Yes.
Any other comments on the product development life cycles or their shortening? Okay, no? Then moving on to the final theme, which is the consumer. And we already heard that there will be several new entrants in the financial sector in the near future, and also a large share of these new actors will be unknown to the consumer. Their brand is not familiar to the consumer. And in a situation where the market is now evolving and there are several new entrants, there is likely to also be some attempts of fraud. That's our concern. So criminals may try to take advantage of the situation, claiming that they are a licensed or registered service provider, even though they are not. But first of all, what role could authorities play in educating the consumer in this situation? For example, on how to identify safe service providers or licensed service providers. Would you like to comment on the authorities' role here?
I can, as a specialist in this field, I can start.
Yeah.
No, I mean it is necessary if you think as an end user or consumer for authorities to somehow, as Paul used, raise the security awareness. But as a consumer, you want it easy. We have the PSD2 that requires that we have a list of safe producers. But I would not probably have the energy to go and look at the list before I chose and I'm sure that young users would not do that. The thing is authorities should in some way try to do this in an easier way, like we have done with the Nordic Swan, some logo that you can see when you're paying online, you can see that there's a secure line. This has to be easy because I mean, we know that older persons, my mother who uses her iPad for Facebook, online banking, reading the daily paper and Swedish stamp tidning, she's probably hopeless to focus on. But the young people who we know that think that they will risk is nothing they have to do. They think that they will live forever. That is the focus group we should be focusing on.
Comment on this. I think that authorities, at least in Sweden, and I think in many countries, are, providing general information and warning consumers about, typical scams and frauds. But of course, we could always do more. But this is a bit like traditional standard frauds that you will always have this. So in a way, you need to find sort of ways of dealing with the fact when it's happened. But I think as an example, I'm not an expert on this, but phishing, which is a typical form of cyber fraud, in a way pretty primitive, but where you use IP telephone technology to fool clients or bank customers, often old persons, to sort of log into their bank, and then these fraudsters can make or convince the client that it needs to send a payment somewhere, for example. This is something that we see. It's a sort of very big phenomenon in Sweden at the moment. So the Swedish police has phishing as one of their top national priorities to try to come to grips with. So we've started a discussion with the Bankers Association and the industry, trying to find ways basically in the setup of the banks and how they work with small routines, small changes that they could perhaps change and adjust, so to make this particular form of fraud at least much less easy to do than it is today. Because we see clearly that there are differences. We see that there are some banks that are much more prevalent in these frauds. So there seems to be differences in the way banks work here, just as an example.
Yeah. And finally, when we talk about the consumers' digital skills and understanding on cybersecurity, that's naturally also important when we talk about the changing landscape. So what more could be done here to enhance consumers' skills and understanding on cybersecurity? That's a tough topic, but yeah, you already touched upon it. Any final comments on this one?
I think I don't have any concrete proposals. I think at all levels, the banking industry, the relevant authorities have to work with awareness in one way or the other. And then, of course, I think also when we look at what happens if someone is fraud happens, I think also the way, at least the way the Danish rules are, I know that the Danish banks have a very strong interest in minimizing fraud, but we see how liable they are for what happens to the single customer. So there is to incentivize it in a way, but I think awareness. Of course. It can take many forms. I don't know how many.
Yeah. Paul, please.
I think one thing that we can do, because this is a new world problem for us in many ways, is we can copy what I think is starting to work now around the education system and educating children around the use of social media. In the same ways that we are in schools now educating children around the proper use of social media, what does it really mean, what are the positives and the negatives, we can do the same around cybersecurity and financial fraud, because I believe these are going to be life skills going forward. The other good aspect of that is we know that model works. because that's starting to have a positive aspect. But then there is the point where, for example, I have had the time to help educate my father around using internet banking and different payment options. And a lot of times it's the children that actually educate the parents around what they should be using and how they should be using it. So I think there is an opportunity to somehow raise awareness in the schools at an early age, and that I think will be a more sustainable approach to the awareness conversation.
Yeah, thank you. And now I think it's time to open up the floor to questions from the audience. So please raise your hands if you have questions in mind. Yeah, there's the first brave one.
Hi, Charlie from Sindus. You're talking about sort of how to handle from a regulatory perspective and from a secure perspective the APIs that the banks are going to be exposing, already are exposing, and that sort of is the new part in some ways. But one of the things from Nordea that came up was also sort of the machine learning and AI, which already now in sort of outside of the financial sector raises a global concern just in terms of safety. It was pointed out earlier that regulatory anything has a long delay in actually taking place. So is there any consideration being taken in terms of protecting against risks that we cannot foresee yet in terms of artificial intelligence?
So the question was what we can do?
The question was that what we can do to the risks related to the artificial intelligence, right? Yeah.
But you know, if I may, I feel obliged as a regulator. But you know, someone pointed out, and I think we all agree that regulators will never be very forward-looking or very much on sort of at the front end of technological development. So we should not expect from regulation that it will give sort of detailed provisions or answers to sort of the most recent or most the newest inventions. I think regulation in this area must be quite principle-based. And the way I look at it, it's regulation of financial firms is really about saying that the firms need to have, governance and systems and risk management structures to identify and to deal with these risks. And then both firms and regulators will have to sort of learn as they go exactly which these risks are and exactly which tools you can use. But regulation will never say, these are the 10 risks and these are the 20 tools you can choose from. I think we need to be at a more principled level. But it's even to be at that principle level takes a lot of effort for regulators worldwide.
Yeah, and then we also come to the principle of technology neutrality, which applies in the sector. So if you take robo-advice, for example, whether it's a person giving the advice to the investor or a robot, either or, the suitability assessment has to be done in a proper way, whether it's a person or a robot. So there are many principles can also be applied in a technology neutral way, and that's the way forward. Yeah, any more questions from the audience? Please, they're in the back.
Hello, I'm Natalia from Swedish FSA, and I would like to ask the panel about one challenging question, which probably is actual for any board in the financial industry, and this relates the balance between technology debt, which actually is also existent even in the fintech companies, and the cybersecurity. How do you see what is the regulator role in in lifting this topic towards the boards? And do you think we have done enough? And probably the question to Paul is, how do you see the dialogue on the board level change about these topics in Nordea?
So I can maybe start off with that first. It's public record that Nordea is investing a considerable amount of time, money and effort in upgrading our core systems. I was actually just asked before the session about where we were with our core banking replacement program, which is a multi-year program that touches hundreds of systems. It's something, so the concept of technical debt is always going to be there. It's not binary. It's, you know, once something is one day old, it's technically old. It's something that you have to bring into the culture and investment cycle, and being a bit more forward-looking than what we may have as an industry have done in the past. But there is a balance, and I will share a couple of views on this. I was talking to someone about stability and customer sort of impact, and I was sharing that they said, well, the cause of our instability in this area is because we have technical debt. And I said to them, I would generally challenge that, because from my experience, the older systems that haven't been touched for a long time generally work. It's the newer systems that breed the instability as they come in and as you bed them down. So it's trying to find that constant balance. I think, from my perspective, at the board level and throughout the bank, we are very, very focused on creating an approach that we can constantly start to refresh and upgrade our environments. Some of that means going to cloud for our hardware. Some of that means going to SaaS for, you know, services that we can build, use straight out of the box without having to customize. And some of it means the longer kind of more strategic upgrades that we're doing. But it's definitely a topic that's high on the agenda for us, and should be for any organization for that matter. And just as a little side note, for the first time now ever, I'm starting to have conversation with cloud providers and startups, mainly startups, where they're asking me, hey, how do you deal with technical debt? Because the conversation before then was, you're too slow, you don't go fast enough. And now they're finally discovering that they themselves have technical debt that they can't easily replace. But it's something that's, I think as we all mature, we're starting to learn is important.
Yeah. Any other comments on this theme? Yeah.
Yeah, I mean, just quickly, we as a supervisor, we don't have an opinion on, you know, technical debt as such, and I would agree with Paul that you know, that's a permanent challenge. You will always need to replace and modernize and upgrade. So it's not going away. So again, as a regulator, we're coming in from a quite sort of principle-based approach. We want to see good governance of IT risks and good, you know, stability in IT systems. And if that's provided for by a 90s or 80s system, you know, we don't have a view on the sort of vintage or year birth date of that system, as long as it's working. So we're very much focused on the risks and not so much on whether it's old or new.
Yeah, thank you. I think it's now time to conclude and thank my panel. Thank you for excellent comments. And now the lunch is served here in the hallway, and you should come back at 2 p.m. sharp. So see you then, and thank you for the panelists.
Okay, welcome to the last session of this conference. I hope you enjoyed the lunch and also some networking over the lunch. At least I heard a lot of very lively talk in the over the plates. Next, we will deep dive in cybersecurity solutions, and our first speaker of this session is Stefano Siminelli from SWIFT. And as a presentation, he asked me to present him as the handsome guy from Italy. But besides of being a very good-looking guy from Italy, he is also Deputy Chief Information Security Officer at SWIFT. He joined the company in December 2016. He leads the Business Security Department, which handles information security strategy, risk governance, compliance, architecture, and identity and access governance. So, Stefano, the floor is yours. Welcome.
Thank you. So I was impressed this morning to see all those fantastic presentations on how digital this area of the world is. I actually print my notes and forgot home, right? You can always rely on Italian structure, right? So I'm literally using my laptop to, not because I don't know what I have to say, but because someone very kindly told me that I can't talk too much. So if I don't follow, it's okay. So nice to meet you, everybody. Let me try this. Moi, Mine, Olen, Stefano. I don't know if it's true. It's okay. Thank you. Okay, so Stefano Ciminelli, my name is, I work for SWIFT. I'm based in Belgium, where our headquarters are. Ciminelli is kind of an Italian name. Yes, that's correct, living there. So like learning languages, spoken languages, sign language, programming languages. Unfortunately, Finnish is not one of those, so really sorry, just to try. I actually asked to the cab driver, say, hey, I need to give a keynote speaker. Can you give me like a couple of sentences that I can, I can brag around? Now, the dude was less Finnish than me, so he keep using a couple of words that I'm not sure I'm able to repeat. Something like something, turpakini, and then I'm gonna stop. I'm gonna stop there, but okay, fair enough. Anyway, I was even surprised that in this country, how we did this, right? No, the other way around. So you actually have a breakfast option, right? Where they offer you, here we go, coffee, vodka, and cigarette. I'm so honored to be here. Thank you very much. Here we go. So, very quickly, who is SWIFT? I guess you know what SWIFT is and what we do as a job. This is, something organized by the Bank of Finland, so I guess you know. But just very quickly, you see all those little dots over there? That's you, well, at least a lot of financial institutions everywhere in the world. We are the global provider of secure financial messaging services. Now, funny story is, contrary to popular belief, even here, even today, during the pause, some people will ask me questions. So you guys are the guy who move the money around. You do clearing. Nope. No. We move messages, okay? We move messages. We enable the community, the global financial community, to transfer messages. For payment, for security, for whatever you want. But we don't move money around. We don't have a big vault full of money, at least that I know about. Maybe, I don't know, whatever. So essentially, we just make it happen, okay? We are kind of the fuel of the global financial services ecosystem when it comes to payment and securities, okay? So that's what we are. So why I am here today? I'm here today to do gossip. Well, no, I'm not here to do gossip. I want to explain you why information security, but specifically security information sharing is like gossip. Everybody kinda interested, listen to gossip. Everybody wants to know what's happening, right? Nobody wants to be the subject of the gossip, okay? That's kinda normal. Information security, exactly the same. Information sharing for cyber attack, even worse, okay? So, I see a lot of young people around, so that's fine. Young people like me, okay? Do you remember when you were a teenager in the, I'm not gonna say that, late 90s, early 90s? You started this concept of LAN parties, where essentially you can go with totally legit games, right? Video games, that's what I say to my kid, right? Absolutely legit. And you can play. So you can share. You can bring one game, someone else bring another game, you put computer together, and you play. However, there was the lame game, and there was the awesome game. To access the awesome game, you had to provide the great game legally acquired. Yeah, at the time, it wasn't that easy to download them, so you need to trade things with friends that actually their parents bought it, so you could copy the disc. But nobody wants to give you access to the good stuff. You have to bring something to the table. You had to share something valuable to be able to have other people share something valuable. Well, that's a good concept. Information sharing is not just, I want to know. Yes, of course. But if everybody wants to know, nobody share. Yeah, someone needs to start. Someone needs to have the gut to start. That's the point, right? But that's kind of important, okay? So, and we will see a little bit later, there are some issues with information sharing, some barriers and complexity is not that easy. We need to try to, as a community, to overcome it. That being said, it's a natural situation. If there is an information which is relevant, I want to benefit from it. Or if I am afraid that that information could harm myself and my reputation, I'm not sure I want to share with everybody else. So we must become better. Whatever we do, whoever we are, small organization, big organization, regulator, market infrastructure, financial institution, government, everybody needs to get better in sharing information in cybersecurity. That's a fact. But sharing information is also a matter of speed. As I said before, I'm really amazed by the presentation given by our Swedish colleague about the digital economy. I was seeing these fantastic numbers. Awesome. I am a cash man, right? Hard cash. We are too. Thank you. Right. Cash, dirty, now. That's, I believe, okay? It's an interesting concept. But absolutely, digital means trust, it means speed, okay? Because if you pay digitally, you can't wait 25 minutes with the cashier that your transaction is approved. And the world is going in that direction. Faster, faster, and faster. Speed today determines our reputation. Do you remember when internet was slow? 10 years ago? Or today, because I live in a rural part of Belgium, I still don't have ADSL at home. Right. 10 years ago, it was okay. Come on, what do you use ADSL anyway? You just open a web browser, go on YouTube, click on a video, the Italian in me, leave, go to the kitchen, make a ristretto, drink the ristretto, make a second one, drink a second one, come back, the video is still loading. Meh, it's fine. Today, the world is different. Today, I have a little daughter, and I want to FaceTime her. And if I get 1 second delay, I got mad. So I automatically, my Wi-Fi is slow. I don't have ADSL, right? So I just switch directly on 4G. It's more expensive, yes, I don't care. 1 second delay, maybe nervous. And that's just me. But think about the financial services. 10 years ago, I wired some money to an Eastern Europe country. It took 2 weeks, 40 euros, and I was happy that the money got there, eventually, to someone. I wired some money a couple of weeks ago to the same place. 8 minutes. Instant payment. Well, 8 minutes is kind of instant payment. It's awesome. And it cost me 0. I like that. I like better than, the 40 euro and weeks and weeks. But the impact on a security perspective is huge. How do you deal with that? Because if your business operations are faster, well, how do you remediate as fast as this? How can you respond as fast as this? If you get 2 weeks to catch up and recover the money if the transaction was fraudulent, you have 2 weeks. If you got 8 minutes, what can you do? That's a very interesting one. So when we move into the that point in information security perspective, the threat actors, they go fast. They go even faster than us. Regardless how fast we are on a business perspective, they are faster. Of course, we have, on a security perspective, to fix every single vulnerability, to close all the door and all the windows. They only need one. Half of it, actually, and they can get in. It's an asymmetric game. It's an asymmetric war. They win all the time if you don't play like them. And what they do well, they share information magnificently. So we have to do the same. We have to be better in sharing information. So consider about how we have today the possibility to access to whatever information we need. I mean, if you ask me now to say, you know, Stefano, stop talking about cybersecurity, blah, blah. Explain us what are the weather pattern condition in Lapland. I have no idea, but I can Wikipedia. Read it. I have real-time data, and I could actually, after 10 minutes, explain you that in Lapland, you have that average weather condition, this temperature, blah, 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 as if I even know where is it. Well, cybersecurity is kind of the same. There is access to a significant amount of information for us and for the bad guys. They are faster because they don't have barrier. We do. We have a lot of barrier. We have access to the same pool of information, but we are slower. Asymmetric game, we lose. It's as simple as that. What are those barriers? I'll talk a little bit later about it. Anyway, if I want to be able to be resilient from a cyber perspective, I want to be able to protect, improve my detection capability, I need to know who are the bad boys that want to go against me, how they come against me, when, which part of the day, which kind of currency they want to steal, by instance, which kind of technique they use, which kind of modus operandi, which kind of IOC. What the hell is an IOC? Indicator of compromise. How they do it? I need that info so I can at least try to improve my detection capability, my response capability, my resiliency. There is no silver bulletproof situation in information security, but we can do better, okay? I need to do all this information, and I need it now, faster if possible, okay? So speed is the essence of cybersecurity, because speed is the essence of information sharing. The fantastic information, the perfect information, 1 second too late is useless. That's very important. And then we start talking about my favorite subject, risk management and information security. Now, I would like your participation, guys, please. Can you raise your hand, whoever has in your own organization a policy, a strategy, a roadmap, something, a document somewhere that say that when it goes to cybersecurity, you take risk-based decision? Come on, don't be shy. Ah, awesome. What does it mean? Aha, everybody. I don't know, I'm sorry, phone call. Yes, yeah. It makes sense, right? We can only go risk-based. We have to fix all the issues, they only need one. So we need to just pick the right one to fix. How you do that? Risk. And risk management is based on what? It's based on information. How do we do risk? How do we do risk? Who is a CISP certified guy here? Risk equal? Don't be shy. I've been told the Northern European people are not shy. Come on. I've been in a couple of festivals, music festivals. I've seen things. So shy. Okay, whatever. Impact and likelihood. Impact is fine. You can determine it, right? Financial impact, reputational input, you can build your own model. Likelihood? Likelihood? Likelihood of what? What's the likelihood that I have a car accident if I never had a car accident? I don't know. The fact that they never had a car accident is a good reason for me not to subscribe an insurance policy? Of course not. But I just don't know. Am I going to have a car accident tomorrow, in 10 years? Never? I don't know. I just don't know. When I used to work for an insurance company doing very interesting advisory services, I actually asked the question to the guy, the head of car insurance service. And he explained me how do they calculate the prime. It was very interesting. So if a customer asks for a quote, he gives all the parameters. Your name, your nationality. Some nationalities are not that good for a car incident. Fair enough. I actually see why, but okay. Sex, gender, whatever, all those sort of parameters, they put it in a fantastic program, blah, 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 blah. It's a whirlpool. And then they get access to a database that contains more than 80 years of data about all possible crash that happen on the world, in the universe, actually, even for Star Wars, right? Everywhere. And they build a model like that. They have so many data, they can calculate in a reasonably precise way the likelihood that I have a car accident. And the funny story is, funny or creepy, depending. I find it creepy because I'm not an insurance guy. They find it funny because it's their mathematical model. They actually follow up, and they like 97% correct, which is creepy. I mean, they know kind of, I'm gonna have a car accident. I understand them, but still. So how do we do that information security? Do we have data on incidents? Very fragmented. It's very difficult, right? We can work about the impact, the likelihood. If we don't share information, that's difficult. And if we don't have enough information, it's difficult to do a strong information security risk management. And we may go to spend a lot of money and effort fixing stuff that the attackers are not targeting. Asymmetric war. So that's why we need to be better in that perspective. That being said, why you need a guy from SWIFT to come here and tell you that? We are not an intelligence company. We are not a security company. We are an IT company. We do a lot of work in IT and telecoms. That's what we do. We don't even move around money. I told that before. So why? Because we have a role. We are a cooperative. And we actually enable the global financial services community. And what we see, and you don't need me to tell because there was a very nice presentation before, how many the cyber attacks are rising in the financial services environment. There is money to be making. Those guys will never gonna stop. Let's be clear. They will never. So what can we do? We were thinking about if we can provide a small little contribute in supporting the financial community services rising up, the bar on a cybersecurity perspective is actually trying to help everybody in safely and securely share information. If we believe in what I said before, that's very important. And when we talk about the bad guys, the professional bad guys, the nation state kind of bad guys coming against you, I have a figure, I have a number to tell you. 48. What is it, 48? It's not 2 episodes of the old series 24. Remember Jack Bauer? No, it's not that. It's a number, I didn't invent it. SWIFT didn't invent it. It's not don't quote us. It's the incident response community that actually come up with that number. It seems to be correct. 48 hours is the time that you have by the moment someone do a fraudulent transaction. The counterparty bank accepts it, and the money is gone. You get kind of 48 hours, more or less, give or take, to try to do fund recovery. After that, it's not impossible, but it gets very, very difficult. So 48 hours. What do we have to do in 48 hours? It's not a lot. First of all, you need to, realize that someone breached you. If you read the report, I was reading the Verizon data breach reader, which is a good one, but pick whatever you want. They say that an average organization takes from weeks to months to forever in some time to actually realize you got breached. 48 hours. And once you realize you have breached, you still need to understand if someone actually tried to steal money. Did they actually try to do a fraud? Did they succeed in doing the fraud? You have to do a reconciliation with your transaction. And you want to do it twice, maybe 3 times, because you don't want to stop all the payment for all your customer. Because unhappy customer, it's never a good business, right? And once you do that, well, most likely, depending in which jurisdiction you are, you have to contact the authorities, which is not necessarily the most lean process you may have. Not here, of course, right? I am on Finnish soil, so that's perfect, very streamlined. Not in every country, let me say like that. You have to contact the counterparty bank, let them know there is a problem. Hopefully you know those people. How do you contact them? Right? And all of this, you have your boss, his boss, the boss of his boss, the CEO, the authority, the intelligence services, and maybe the police, breathing on your neck. Right? Do you remember when you applied for the CISO job? You thought it was cool to have a business card? I am the CISO of that bank. Well done, guys. Well done. So, how can we help at Swift? For all those things, not really. That's your problem. No, we can a little bit. But sharing information may actually help you not even start with all this problem, or at least reducing the likelihood of have it. So what we did, we launched a Swift Isaac portal where we want to share relevant information for everybody. And I go in detail, I give you a little more detail on that one because it's important, it's something I believe in. But let me still spread a little bit of negativity still. Just a little bit, okay? So I want to explain what are some of the barriers. Because you want to share, you want to go, and you get slapped all over direction, okay? It's very difficult to get there somewhere when you have barriers to go through it, okay? You feel sometimes the little cat. You try, you see the light, but you don't know if it's the sun or is the train is gonna hit you in the face, right? You see a light, that's it. There are several challenges that as a community, an entire community, we have to fix, and for which I'm so happy to see so senior audience here. I see national bank representatives in several countries. The role of regulators is absolutely paramount. There are, by instance, geopolitical issues, geopolitical barriers. We say before, threat actors, cyber attack, are global in nature. Defenders, not. There are geopolitical issues, sanctions, whatever reason you have, where people cannot talk to each other. And it's been proved, we see that. The bad guys use this. If you and you are in 2 nations that are not allowed to communicate, I'll attack you to attack her. Gone. You need 48 years before you discuss there, not 48 hours. Okay? Fear. Do you remember the gossip example? Nobody wants to be in the gossip. So who is the CISO here in this room that want his name be like the highest hashtag, I'm learning this word, hashtag trend on a social media next to the word data breach? Nobody, right? You end up opening a restaurant somewhere, which may be a better option than having everybody breathing on the neck, but okay. Competition. Now, there are very interesting studies out there, not a lot, a couple are very interesting, that do the calculation, well, at least a model around the economics and the anti-economics of information sharing. In the sense that at the end of the day, consider you are a financial institution, imagine you're a bank, on your market there are other banks. At the end of the day, they are your competitors. They are your peers, sure, first of all, but they are also competitors. So if you have an information that doesn't put you in a very nice light, you have been hit hard, you can be afraid that your peers actually act as a competitor and use that information as a competitive advantage. There are economics models with formula that I don't understand, but it seems serious. papers that are very complicated, so it's still kind of fresh. I think we will have a better kind of explanation in the few years there, but there is a model there. There is a trend. So there is fear. It's normal. And what about regulation? In some countries, you are not allowed to share. Because if there are possibly, well, people use expression like bank secrecy. Now, this is more, it's not a legal term, but you get what I mean. Sometimes you're not necessarily allowed to share some information in case of an incident. There is practical issues, language. There is a problem with a counterparty bank. Nobody speaks English over there. How do you talk to them? You don't know them. You don't have phone number of those guys. How do you contact them? And then, generally speaking, information sharing, which language you use to share. Who say that English is the most spoken language in the world? Italian is, but okay. You don't agree. Fair enough. Okay. Which language, which format, which platform? Who operates the platform? Who vet the people that get access to the platform? All these kind of questions are practical, but still interesting. What about accountability? At the end of the day, in a financial services institution, in a bank, who is accountable to protect the payment system from a security perspective? The CISO? But usually the CISO in IT. Operations? They have no idea what security is. I'm oversimplifying. Legal? Finance? Risk? Nobody? Most likely. So those questions are there. There are barriers. The poor kitty is trying to pass. It's not easy. It's really not easy. As I said before, SWIFT, we are not an intelligence provider. We are not a regulator. We are not a cop. We can't solve those barriers. We suffer the same barriers. What we have is a global outreach, and that's what we share. That's what we wanted to do, and we actually released a portal called Swift ISAC portal that try to address just a couple of those. This is, yes, yeah, there is one serious slide, don't worry. Just one. So essentially, what is our portal? So first of all, on accountability perspective, Swift released a program called Customer Security Program, which is way large, and I need way more time to discuss, but no, she's smiling, but she doesn't want me to talk that much. Thank you, anyway. Information sharing is just one piece of it, but essentially we released a program that wants to help every single financial institution try to raise the bar in a community perspective. By instance, releasing a list of security controls that are mandatory, and we ask every SWIFT user to be compliant with those controls, and all sorts of issues. But we ask ourselves the question, if you must be compliant, if you have to do something, well, you need a name, an action, a date. The date is every year, action, just too much. The name, who is accountable? Well, you like it or not, we take the decision. We consider the CISO of the organization as accountable for the security of the payment infrastructure. Okay? So that's what we did. So at least we have a name. The accountability part, check. And so what we build on an information sharing perspective is the possibility to have a point of contact in every financial institution. CISO to CISO, you have to build a network. And the time where CISO were just focusing internally on my firewall rule is gone. It's still important, but it's gone. You need to know who are all the CISO and the head of the SOC and the head of incident response and whatever other relevant role for each of your counterparty banks. You need to know them. You need to have their phone number and being able to call them. 48 hours, right? You need to be able to call them. Yeah, well, but I am a specialist in security. I like to code. I don't like to talk to people. Yes, welcome in my world. Welcome in cybersecurity. We have to change. That's how it is. And then we released the Swift ISAC portal. This is a free, non-commercial. I'm not selling anything. No, we always sell something, but right? No, I'm not selling anything. It's free, non-commercial, non-revenue generating portal where you have information shared by the community for the community. If your institution uses Swift, if you have a BIC, if you are connected to Swift, you already have access to that. So if you never use it, no bueno. Go and use it. It's important. Why? The specific purpose here is not to provide a threat intel platform. It's not. I said already we are not an intelligence services or a security provider. It's few, limited, interesting, actionable, real data related to or recently passed attack against Swift services and infrastructure that are hosted at customer. I can't be more narrow than that, okay? Just this small. You don't find thousands of feeds about all the malware all the world. You only find 100 maybe security buildings that are extremely narrow. But this is what you have to do. This is what your team has to go and check. And anytime there is something new, I am not saying that every time there is a security built-in, an incident happened. I'm not saying that. You are thinking that I say that. I'm not confirming, I'm not denying. Maybe it's true. You have to go in there. Anything there is something new, it means that something maybe happened or is happening. Successful or not. So that's very important. What you can find there, you find interesting data. You find what you say IOCs, indicator of compromise, you find malware, you find technology information, but you also find information around modus operandi. How those bad guys get in, how they act, how they approach your organization, which is as important, if not more important, than the technical part. And so I really suggest you and your team to go and look at this. Just a small number, all sort of number there, but essentially, the number 3, you see 5,800 unique user. When I say user, I mean organization that are Swift user, okay? You see the first slide, we are more than 12,000. So that means that a gold mine of extremely important information, free and already available to more than 12,000 organizations, has still been accessed only by more or less half. It's in few months, so it's a very good thing. But it also means we need to, get better in go and check. Use information that is there already. And then, of course, share as well. Now, some of you are looking at me with like a face and saying, yet another portal? Seriously? Like, come on. We have a gentleman of FS Isaac here that was asking questions this morning. Fantastic organization, believe me. There are dozens of organizations like, better or worse, but like that. You get malware vendor, security vendor, you get website, threat intel feeds, whatever. Seriously, Swift? Yet another one? Yeah, got it. Got it. But I told you, right? Non-commercial, free, already available to everybody. That's the point, okay? And on top of that, we have an outreach to the entire community. The big guys, the big institution, you are a big institution. You already have all the feed that you need. You have all the intelligence that you need. Actually, we provide that information to the big security vendor on anti-malware and perspective. So you actually already have that information if you don't check. If you have those expensive contracts. The vast majority of people in the network, in the financial services community, people and institutions are small. They don't know, they don't even have access to this information. They don't know what to do. They don't have resources, they don't have skill. They may don't even be able to read properly English and understand it clearly. They are not going to use all these fancy, expensive, fantastic, useful resources that are accessed by, what, the 5% of the community? That's a big difference. I'm not saying this is better. I'm saying it's a completely different initiative. It's for everybody, okay? That's very important. And you think about, license fee, that's very expensive. And I was discussing with someone before, and someone will say, yeah, but there is for 10K, you can have this feed from that specific company, which is fantastic. It's like it costs nothing. 10,000 euros, it's just nothing. Yeah, for a normal, even for a, medium-sized bank in Europe, 10,000 euros, it's okay. I mean, 10,000 euros for a small financial services institution in an exotic country, it's, I don't know, 15 people salary, 20 people salary, like 25% of the company. That's huge. It's absolutely inaccessible for them, okay? And the bad guys knows it. So voila. So you think about a resource which is free and accessible. Free like in freedom. You get the info and you do whatever you need, whatever it takes to fix the issue that you may have in your institution. And it's also, if you want, free like in free beer, right? It's not revenue generating. So just do it. No excuses for not doing it, okay? I want to see statistics tomorrow morning they go like that in Finland, Sweden, like the Nordic, right? Someone from Iceland is there, so also Iceland, okay? I'll check out. Huh? I'll follow up with you guys. Believe me. And if you get there, as I say, there are interesting information about not just the technical part, which is very important, but, as I say, the modus operandi. If you want to know, if you want to understand how the bad guys use a malware to get in, it's not just technical, because the malware, you have a new malware every hour, every 10 minutes, every 30 seconds. But the way they think about your organization, the way they do the social engineering, the way they get in, the way they operate, the way they do the command and control, all this modus operandi, it's fascinating. And that's what made the difference between survival or not. And by instance, you go there, you go bolt-in, security bolt-in number 10060, and you get all that description. If you want to know how the bad guys usually operate, once they get control, they get the money, or they get the payment, and then they destroy everything. Or they make your life difficult to reconcile because they make your system inoperable. How do they do that? What's their approach? Security bulletin 10003. This information is not for the CISO. Yeah, it's for the CISO, for the SOC, yes. But it's as much for your anti-financial crime people, for your anti-fraud people, for your operation people, for your legal people. This is not a cybersecurity issue. The bad guy use cybersecurity. They use malware because it works. But it's about money. It's about crime. It's nothing new. There is value, and someone tried to steal it. Cybersecurity is the easy way. Maybe tomorrow will be difficult, they will do something else. So you, as a CISO, you have to share your information also internally, with your peer internally, because this is how you put together a winning team. Second serious slide of the presentation, but don't worry, I only have two. How do we generate the information? I could talk about hours. No, it was a metaphor, don't worry. We can talk about hours, about how we end up creating intelligence, how the intelligence sharing. I'm not going to do that. I spent like literally 20 seconds. But I want to make you understand how we do it. We, as Swift, we may be contacted by, unfortunately, one of Swift users that may have an issue. They may think that they got compromised, they have an issue. So we are more than happy to help, to discuss with them. Again, not for money, right? Our objective is to help the community. And if, unfortunately, that's true, we get some case triage, we discuss with the customer, with the CISO, with the experts, and we end up, unfortunately, gathering evidence, doing some serious forensics analysis, understanding what happened on a, as I say, IOC perspective, how the model operandi. Sometimes we discuss about the attribution. Attribution is important, but is a complex mess. You don't want to get trapped into this conversation either, but it's important. So we do all this kind of work, and at the end, voila, we create a security bulletin, specific report, and we share the information with the community. That's all the objective. So it is not speculation. It is not observe this general trend. It is not, there may be some issue. No, this is just data, situation that we as Swift get as a first hand. There is something valuable. We really believe it's valuable. We share it, period. That's it. As simple as that, okay? So maybe as a conclusion, what I want you to take away is that information sharing is important. Everything else is important as well, don't get me wrong. But that's the little piece that can make the difference. You may have all the tool of the world, all the capability, all the knowledge, whatever, the bad guy will be always 1, 2, 3, 5, 10 step faster than you. Imagine the power of a community that put collectively together a resilience capability. To do that, you need to share information. And that's what we, try to do. A Swift, okay? As simple as that. So, I have been told that the Northern European audience is infamously silent when it comes to questions. I don't believe it. So, question. Seriously? Okay. Or even more importantly, feedback. Something that you think it would be relevant for me to go back and try to improve. A brave individual knows. Yes, there, thank you. Chocolate for you.
Oh, no? Great. Sorry, I'm a computer scientist. So that I'm aware of, there have been 3 public attacks, successful attacks on the SWIFT network in the last couple of years, which for those of us from networking is quite shocking. You have a very and well-deserved reputation. How many have there actually been?
Interesting question. Thank you. So, first thing first. As per today, there are no evidence. It is not just a legal disclaimer. There are no evidence until now. I'm not jinxing it, but until now, there are no evidence that SWIFT network and services has been compromised. Okay? So I think you can understand that I can't comment specifically on case for customers. That's not fair, of course. But generally speaking, every incident that you may or may not hear, because we don't control what the press communicates, so I'm not confirming or denying, but in case something happened, it's always happened eventually at customer premises, which doesn't mean that they are bad. It's not, don't take it as a blaming cultural, it's not that. But if you are an attacker and you invest a significant amount of money and resources to attack, it's not for free for them neither. You go for the money. And as I say, unless I'm not aware of, we don't have a vault full of money at SWIFT, right? So we have the messaging services and the network. We take this extremely serious because we don't simply say, until now we are okay. After, on a customer premises, guys, is your problem. If you get hit, it's your problem. It's not, because we are operating in a global financial community, which is based on trust. And if the trust is broken, do you need SWIFT? Big question. So that's why we have this information security initiative, the overall information sharing, the overall customer security program, where we actually try to, whatever we can, in a very humble way, to support every financial institution in that perspective. But just to confirm what I just said, as per today, there are no evidence that our own services, our own perimeter, our own network, our internal has been compromised. Maybe one of the signs is that I'm still here and my budget still works. That's kind of also an evidence. Please, gentlemen.
So I just wanted to reinforce that message. SWIFT have actually been extremely transparent and constructive in briefing our members, our community around the world. Especially, there's been this very, very strong evolution in the transparency of the messaging whenever there is a suspected or a known attack on SWIFT infrastructure. So I just want to underscore that we also haven't seen anywhere any evidence of an actual breach of the infrastructure itself. So SWIFT have been very, very good about communicating with the financial sector about what the observed behavior was. In most cases that we're aware of, it's been lack of a strong security baseline that allowed access to, for example, SWIFT terminals. And I think the SWIFT, the CSP has been very good about providing standards to their customers to improve that security baseline.
I can only agree. Thank you. no other question? Another gentleman, and then I'm done.
Hello. Hello, Miika Syrjänen from Bank of Finland.
Hey.
Swift and Microsoft announced some cooperation some weeks ago about going or moving some of your functions, at least on piloting, moving into the Microsoft Azure cloud. What do you think are, in your opinion, are the biggest problems or challenges or risks when going into cloud, and how you are going to handle them? I think there are a lot of companies and banks who are thinking about going to cloud, and it would be nice to hear your opinion how you approach this going cloud.
Thank you very much. That's a very interesting question. We actually were discussing about the topic internally a couple of days ago, so that's how it shows how important it is. So historically, Swift has not been a, how can I say that, a first user or early adopter, right, of a cloud perspective. So that's why indeed we start trialing to piloting for new specific kind of services that we absolutely need to scale, and to scale you need to cloud. So we see several risks, of course. Personally, disclaimer, I used to work at a certain point in time for a cloud provider as well. So I was on the other side of the fence. It didn't work very well, but that's another story. It wasn't my fault, hopefully. The risks are different. So we are, as a company, generally speaking, we think that on a security perspective, we are in control, and we want to be in control on every single system. And we base our risk management on the fact that we know what asset we have, we know which vulnerability we have on every asset, we know by when we're going to fix them, and we are in control, or at least we believe so, right? Whether the big complexity and risk is that you essentially trust a third party completely. Because as much your cloud vendor may be transparent with you, it's essentially a kind of a black or gray box. And that's required a completely different approach in terms of process. It's a data-centric approach, which has never been really the case in the industry, honestly. So you need to know which kind of data is being accessed by whom at any given point in time, and in which state that data is, and how is it classified. Because it's very, very easy, or at least way more easy to leak out confidential data if you simply apply whatever model you have as internal security on a cloud. Cloud, I don't believe, personally, I don't believe the cloud is worse. It's just a different model. It is not good, it's not bad. It depends what you do. And to be also fair, there are, without city name, there are some cloud providers that are so big and strong that it's kind of difficult to imagine that they can be worse than me in security. Some of those big guys have 10,000 people working just in security, right? It's unbelievable. That being said, the way you control this, that's a very big risk. It's more an operational risk that we see that. Thank you. Okay. Thank you very much.
Thank you, Stefano. You finished just before I was supposed to say you turpa kiinni, which is a polite way in Finnish saying that. Could you please kindly start shutting up? Well, thank you for your presentation. Very interesting, very lively. And one thing which you took up was the accountability and responsibility. Because in Finland, I think that in quite many organizations, we have a person, because I don't know the gender of this person, who is called joku muu. And in the English-speaking world, this person has first name somebody and family name else. Okay. So if there is something that should be done or something taken care of, then in Finland we ask, could joku muu take care of that? Okay. Could somebody else take care of that? Or it is on the responsibility of somebody else. So I think that it's good that you took that up. Let's continue with the third panel, and I welcome the moderator and other panelists on the floor. And while the gentlemen are there putting on the mics, I will start with our moderator, Aleksi Grym, who is head of digitalization at the Bank of Finland. He manages various projects related to the digital transformation of the financial industry, covering topics such as fintech, digital currencies, payment technologies, and cybersecurity. Then we have Mr. Kamal Iberaken, who is Chief Information Officer of Euroclear Finland and Euroclear Sweden. He is responsible for leading the IT strategy and the IT delivery for both entities, leveraging the expertise across the Euroclear group. And our fourth panelist is Mr. Robin Oldham, who leads BAE Systems cybersecurity consulting practice, where he helps businesses defend themselves for a cyber attack and thrive in the digital world. He has over 15 years experience, including advising numerous boards on how to manage crises resulting from a cyber attack. And our last panel participant is Mr. Wiebe Ruttenberg, who is Senior Advisor in the Directorate General Market Infrastructure and Payments at the European Central Bank. He is focusing on technological innovation and cyber resilience with regards to the financial industry in general and central banking and financial market infrastructures in particular. And I'm very sorry to say that here we have an all-male panel, but I think that that is an exception because I think that is the only one that we have today. But I just apologize for that. But I'm confident that these gentlemen can well handle this situation.
You could
and live with this.
join us.
You want me to sit here? I can take a chair and be silent.
Sure.
Yes, which is very difficult for me.
Don't say it's someone else's problem.
And I just have to inform you that unfortunately Mr. Gary Merschel could not join the panel today, but he sent his best regards to the conference. So, Alexi, the floor is yours and other gentlemen. Thank you.
Thank you very much. So at least it's one less male on the panel today, with one not being able to come. So thank you very much for letting me moderate this final panel. I think we have the benefit of having heard excellent presentations, and we have a chance to reflect and discuss on some of the things we've heard. And for me, it's been interesting to see that we have a lot of people with an economics background from central banks and economists, and then we have some more technical experts from the security, cyber background, and I come more from the economic side. And revealing my ignorance, thinking about the concept of resilience, which is the topic of this panel, we're trying to think about how to improve resilience now that we've learned these many things. What a complex concept resilience is. That's been a sort of eye-opener for me today, is that it's not just being protected against cyber attacks, it's actually much more complex than that. It's being able to adapt, learn, share information, respond, as somebody mentioned earlier today. So quite an interesting concept. So why don't we start with the round of introductions? So maybe Wiebe, you can start, tell a little bit about your work and how you see the concept of resilience in your work.
Thank you. If I just look back at what has been said today, and to use some buzzwords, I would say it's about financial stability, it's about concentration risk, it's about third-party risk. And I think there you automatically come to the world of financial infrastructures. And I'm here with SWIFT and Euroclear, but of course there are many out there. We talk about systemically important payment systems, CSDs, CCPs, the SWIFTs, the SIAs of this world. And if you talk about financial stability, the stability of those infrastructures in the context of cyber, it's clear that we have a huge effort there to ensure that resilience is in the market, resilience is in fact, and that we even further improve the resilience which is already out there. From that perspective, the ECB, but I would say the European system of central banks, is very active, not only at national level, European level, but even at global level, to not only agree on principles, very important, but also to translate that into more practical means of not only assessing to what extent the financial infrastructures are resilient, but also helping them and entering into a dialogue, concrete dialogue, how to further improve. And just to give you some examples of a strategy we have developed and are implementing right now, that is that based on the, maybe you've heard of it, the CPMI-IOSCO cyber guidance, we have asked about 78 financial infrastructures in Europe about, okay, how do they assess themselves as cyber resilience? We have a very simple multiple choice questionnaire based on what about the identification of your critical assets? What about the protection of that? What about detection if something is happening? What about recovery and resolution? But even more important, what about your governance? To what extent is your board involved? And outcome was quite telling, I would say. Sometimes very reassuring, sometimes quite eye-opening. But it's very clear that a lot of work is still to be done, and a dialogue between overseers, supervisors, and those entities is ongoing. Happy to announce that probably Monday we will publish as ECB the cyber resilience oversight expectations, which are more concrete, say, concrete guidance on how to implement all these requirements which are out there, but not as a compliance document, but as a document on the basis of which a dialogue can start between the overseer and the infrastructure, but also a document which can be used for the benefit of the infrastructure itself. But maybe, and then I will stop there. Another important deliverable, and maybe you've heard of that, of this strategy we implement, is the TIBA EU framework, the threat intelligence-based ethical red teaming. That is, you can have all these nice plans in place. You can have all these good intentions. You can do all this information sharing. But in the end, the proof of the pudding is, of course, in the eating. And that is, you need to test. And penetration testing and so on, that is, of course, say, common practice in many institutions. But you have to go one level higher, especially for the systemically important systems. You really have to go to, okay, what are the threats my institution is facing from a cyber perspective? Who's interested in my institution? And if I have those threats and I know those actors, what kind of attack scenarios do they have? And based on that knowledge, you ask somebody from outside, not your internal penetration team, but somebody from outside, really to start attacking your organization according to these kind of scenarios, following these kind of scenarios. And that is quite, I would say, an eye-opener for many organizations, and also a very nice way to get attention at board level of your organization on the importance of proper cyber resilience and importance of proper cyber resilience for the continuity, the business continuity, and say the consistency of your organization. So, make a long story short, yes, we are regulators. Yes, we are sometimes a pain in the ass, of course, with requirements and so on. But I hope it's also reassuring that also as Eurosystem, we have now made the step to come up with more practical instruments to help you on equal footing to improve. Last but not least, I should not forget that, of course, we're also facilitating, so as we call it, the Euro Cyber Resilience Board, because we noticed that there is a need among board members of different organizations to speak to each other in an open, trustful, trusted environment in an equal footing way. And not only the board members of financial infrastructures, but also board members of national central banks and other authorities. And not in a dialogue between regulated versus the regulated, regulator versus the regulated entities, but really in the understanding we're all in the same boat. We're all victim, and we have to find our way in this together. Thank you.
Very good. So Robin, you're not coming from a regulator, you're coming from a company that makes submarines and fighter jets. Like, how do you see cyber resilience?
Yeah, we've got the solution. I'm Robin Oldham. I'm from BAE Systems. You may know Amor as one of the world's largest defence primes. I work for the Applied Intelligence Division, and we help organisations to comply with regulations, to combat fraud, and to defend themselves from cyber attack. So the rest of the business deals with land, sea and air, and we deal with cyber and digital. And within that, I lead our security advisory and technical services business. So we help organizations to understand the threat and risk that they face, to build resilient architectures, to improve their security operations. And Martin was talking earlier about Sweden becoming a cashless society. It's very easy when there's not that kind of physical thing that you want to touch and hold for things to lose their value. They're just zeros and ones on a screen. And one of the privileges of my role is I work with lots of different sectors and organizations, and I was doing a briefing with a telco in the UK recently, and was talking about the value of the data that they hold. So they're not, they're not sitting on a bank vault full of money like financial institutions are. They had about 10 million customers, and the price that morning on the dark web for a customer record with name and address and date of birth and credit check information, everything you might need to open a bank account and to take out a loan or a mortgage, was about $30 on the dark web. So just the value of the customer database that they've got, 10 million times 30, $300 million worth of data that they were sat on to an attacker if they could get their hands on that. And you could see the penny drop that, there they were, it was the development team working on their account platform for customers viewing their bills and things like that. This isn't worth anything. Why would anyone want to steal anyone's bills or the data that's in that platform? That's the reason why. And how long would you invest personally for a $300 million payday? Would you spend a day on it? Would you spend a week on it? A month? A year? Would you take as a sabbatical if you could, guarantee yourself a $300 million? Don't answer this question, by the way. I don't want to see lots of hands going up. Samu from F-Secure said that the reason why attackers target the banks is because they've got the money. So you've not just got the data, but you've also actually got the asset that people might be after. And people are willing to spend a lot of time to get their hands on that. So the Bank of Bangladesh heist, the first of the attacks that spawned the customer security program from SWIFT, they were trying to make off with $951 million. And the amount of planning and time that went into that was phenomenal. So the accounts that they were eventually going to transfer the money into were opened 9 months in advance of the attack. They'd already got to the point where they'd been doing reconnaissance and they'd got access and they'd worked out how all this was working. They knew they were going to need somewhere to transfer the funds out to afterwards, 9 months before they eventually conducted the attack. Compare that to the 48 hours you've got to react, and you start to understand the problem that Stefano was talking about. But I'm really keen that this is about solutions, because there's a lot of doom and gloom, but there's also a lot of really good things that come out of the digital economy. And it's quite funny to me because we tend to use the word digital when it's good and cyber when it's bad, but fundamentally they're the same sort of thing. A bit like email, you don't have digital mail or cyber mail, all just prefixes to the same thing. Paul earlier from Nordea talking about their insurance claims down from 75 days to 1 day for disability insurance claims. I mean, that's phenomenal. That's a really tangible benefit to their customers and to their business as well, especially if they're managing to reduce fraud. So there's real benefits here in the digital economy and what we can do. The important thing for me is that while we're automating all of these processes and systems, we're keeping in place the human checks that currently or traditionally have happened. If you went back 100 years and you wanted to transfer all of your life savings out of your bank account, you'd have to walk down to a branch of a bank, walk in with some identification to a bank teller that you probably knew and recognized you and say, hey, I want to take all of my money out and I want to send it to this, I've got this great deal. There's this guy that's written me a letter from Nigeria. He promises me he's a prince and he just needs all my life savings. And the person in the bank on the other side would go, this doesn't sound right. And get the manager over, and are you sure you want to do this? So as we build digital systems, computers and automation are really good at doing whatever we tell them to do. If we tell them to transfer money, they transfer money. And if you're an attacker, you can use that to your benefit. And so we build these really efficient processes and systems, and we just need to make sure that we're building in the right kind of checks and balances as well. Not to slow them down, not to realize the benefits, but just to put the checks there in the first place. You know, it's the kind of non-functional requirements, if you like, that you may not have realized that your employees and your staff were doing in, you know, just 10, 15 years ago, compared to now when you reinvent these services. So yeah, I think there's lots there to discuss over the next sort of 45 minutes or so.
Good, yeah. So Kamal, you're representing Euroclear, which is another major financial infrastructure provider. What are your key takeaways from today?
Yeah, so it works. Yeah, that's just me then. So maybe a few words about Euroclear. So Euroclear, it's, we operate in the post-trade, so transaction, settlement, custody services, collateral management, and also a range of services for issuers. And here in the Nordics, so we are a global group. We are operating in 40 markets, and here in the Nordics, we are the CSDs for Euroclear, for Finland and Sweden, so Euroclear Finland, Euroclear Sweden. We are talking a lot about cashless society earlier. Just wanted to mention that a big part of the financial market is actually securities. It has been what we call dematerialized, meaning digitalized 30 years ago. So a big part of finance is already not physical. And so that's, I think, quite important to keep that in mind. Of course, that the cyber risk, and as you were saying, Robin, is the other side of digital or dematerialized, has been with us for a long time. As a CIO for Euroclear Sweden and Finland, cyber means mostly for me trying to be the bridge between the board and the executive committees where the decisions are being taken and the day-to-day where the people are really making cyber real. And what it means is you need to be able to explain cyber in non-technical terms to the board, and it's actually quite challenging because the decision-making process is all about understanding and being informed. And I think cyber is interesting because it's a form of risk that can change quickly in any kind of risk. It's basically a joker card. It can become a financial risk. It can be a continuity risk. It can be operational risk. So in that perspective, it will always be there, indeed. Now that we are in this new world, it will always be with us. And the board needs to always be within that realm. So I really welcome this initiative from the ECB to get board members to discuss in an open way about cyber and not be worried about sharing information. I think it's a very good thing. And so in terms of solution, I think cyber, from my perspective, is a very interesting area, if I can say so, because it's full of contradiction. Part of the contradiction is, we were talking about trust before. Trust is also a track record. And a track record in finance, I think my voice is going on. Track record in finance means actually continuity over a large number of years. It means also legacy systems. So, and the way the legacy systems have been built and make sure that they run all the time means that you need to navigate a very narrow path. And that also means being slow. And as we said, cyber is not about being slow. So that's already a first contradiction that you need to figure out when you build solution is how do you get the quality that you're used to provide by being slow and still being able to act very fast. So that's one contradiction. Another contradiction in cyber is it's all about managing complexity, as we said, so trying to make it more simple. The more simple you are, the easier it is to see where you are and to manage your asset. But also cyber creates complexity because it's about segmenting your assets and your network. So the balance between the two is actually where solution exists. And of course, we can build on things which already exist. I think someone was talking about culture. It's very true. Cyber is a community risk, so everyone is involved in cyber. And I also think the solution are community solutions. And Swift, you were mentioning that. Stefano, you mentioned that's very true. The solution will come from the community, and you need to take things which work somewhere else, and you need to make it work in your company with its DNA. And I think in finance, or especially in financial market infrastructure, we have this DNA of continuity, of resilience. And I was thinking about that the other day. 20 years ago, where we're trying to build this continuity or this business resilience, we are kind of grappling with the issue. How do you do it? You know, you have 2 data centers, how many replication do you need in all of this? And now it's totally normal. People understand that when you go to any kind of meeting in a company like in a bank, people will ask you that. Do you have a single point of failure? Things that comes from legal, from risk, from whoever. So it means that it's part of the DNA now, but it's not yet the case for cyber. If you try to roll out a new system, I think I was discussing with someone, and the password is too long, people complain, instead of seeing this as, yes, it's great, we are increasing cyber resilience. So the DNA of the company, or the mindset, is really the key part, and it's still something I believe that will be the major part of the discussion.
Okay, so the main topic of this panel is improving resilience. I think, you know, again, not coming from a cyber background, seeing the first couple of presentations today, I was scared. You know, it scared the life out of me hearing those stories. But let's take a slightly more positive approach. Sort of where do we go from here, and how do we get something out of this conference so that we can improve resilience? So for me, logically, the first question is to ask, how resilient are we now? So how do we know that? Can that be measured? So what's the way to determine what our resilience is at the moment? Does anybody want to take a stab at that? Maybe Stefano?
Yeah. Okay. Well, very simply, just clarifying what I was saying before. I told too much, so we'll be very short. It's kind of the likelihood. So until today, until right now, and I hope I'm not, you know, say something bad now, we didn't have, let's say, a ground zero incident on a resilient perspective, because our financial community worldwide is so interconnected that when we talk about, so I totally agree with you, when you talk about cyber resilience, we're talking about a community resilience. I can be the best in the world, you can be the best in the world, you can be the best, you can be the best. But with our interconnection, at a certain point in time, one of us is down, we all go down. We did not have that yet, which shows that in some sort of shape, we are, as a community, we are resilient. But that's definitively not a good answer, right? Because it's not because I didn't have a car accident until now that I don't need an insurance policy. So we certainly need to invest on a cyber resiliency perspective. When you see the title is different approach, the first thing I think is this. I think we have a complicated model where we interconnect each other. I think we should be able to become resilient and maybe turning down from complicated to complex, which is it's still not easy, but at least we know what are the interconnections and you can manage them.
Any other views on like where do we stand now? How resilient are we? There haven't been any sort of super major attacks or cases, but have we been lucky or?
It's always dangerous to answer these kind of questions. It's a little bit in the domain of the known unknowns and maybe even the unknown unknowns. You know, these kind of, I think Dick Cheney years ago mentioned this. So I think in general the sector has proven to be quite resilient, but we do not know what is coming ahead, of course. And as such, there's a continuous need, as said several times today before, to continuously improve cyber resilience, focus on individual organization, and starts with simply asking questions. Do we have a strategy? Is the strategy really implemented, followed up? What about, do we not only do protection, but detection, forensic? What about forensics? Also, that was mentioned today. Many organizations probably do not have enough capacity there. So you can easily start with answering some very basic questions, and then you have rather soon a flavor, are we on track or not? But of course, then start the tricky part. How do you do your detection? How do you do your forensics? And there, I'm not the expert. But what we have provided for, I just mentioned it, will mention it again now, is this testing framework, really for organizations which think, okay, we are quite there yet, and let's see then, okay, whether indeed you are there and whether you're really resilient. And for that, this program we have developed, which I'm happy to say that is already implemented in the Netherlands and is based on work in the UK, but also it's in the public domain that Denmark, Belgium are implementing this, focus on core financial infrastructures and core financial entities. And we will see probably over the years to come that more and more jurisdictions will enter in that, say, domain, and not only doing, say, the traditional assessments and having the traditional dialogues between the overseer and the entities, but really asking, okay, show me where your money is. Show me whether indeed you can sustain a certain test. And of course, we know in the end everybody will be penetrated, but then, okay, what are the lessons learned from these kind of tests? And I think that's just as an example that we are entering in a different phase now, that also at board level there's more understanding for these kind of issues, problems, and possible, maybe not the final solution, but ways to address the challenges we face.
It kind of makes sense. If you want to know if it breaks, take a hammer and try to break it, right? So, any other approaches?
I'll take the measurement side of the cyber resilience question, because I think that's an interesting one for me. And within organisations, I think often they struggle. So lots of best practice is to take a risk-based approach. We talked about, yes, we take risk-based decisions and that kind of thing. And you assess what your cyber risks are, and you work out what controls you might need to put in place, and then you monitor those controls. And all of these, best practice things, it might be NIST, it might be ISO 27001 standard, talk about continuous improvement and learning from experience. That's the bit that security teams, I think, tend to struggle with and find difficult. And without that, you're just doing top-down, and you're presenting back up things that don't allow the right decisions to be made. So you end up with reports going to the board that talk in terms of the number of vulnerabilities that we've got, or systems that are unpatched, or the number of incidents that we'd had this month. Can you imagine if you're the finance director of an organisation, and instead of turning up saying how much money you had on the balance sheet, you turned up and said how many transactions didn't go through that month? It doesn't inspire confidence from the rest of the board. So focusing on getting the link back up from your monitoring to your controls level and their effectiveness, and then what does that mean to your risk? That's where organisations, I think, need to really focus on getting a handle on their own measure of cyber resilience, and then from that you can start to look at collective measurement as well. And cyber's a relatively new profession, right? So there's lots to learn from financial and operational risk colleagues that have been doing this a lot longer, like finance or op risk and those sorts of things. So I think looking, it's very easy to get fixated on the kind of inward view of fixing all the cyber problems, rather than the kind of external, what can we learn from those around us that have been doing similar things for a much longer period of time.
Kamal, do you want to add anything?
Yeah, I think you asked a question about how resilient are we? I think it's a very good question, in the sense that we can be quite resilient as a community against what we have seen so far. I hope so, but against what's coming, very difficult to say. I think that's really the question, what we need to ask. And as we said, it goes very fast. It's better like this. So it goes very fast in terms of attacks, and so it's important to get that in the new way we test or evaluate things. In terms of measuring, I think one of the best measure is time. How much time would it take to breach the system? How much efforts should the attacker spend on breaching the system, and how quickly can you recover? And actually, the more complicated part is the recover. And recover means you know where you want to be. And I think today, one of the things which is complicated with our system is we expect perfect recovery. We expect that you recover with no corruption, no delays, those type of things. And I do believe that, for me, that's one of the things that we need to address, to see if it's possible, as again, for society as a community, to recover to a point where, yes, you have to accept there are losses, there is corruption. And if you look at the way, for example, digital payment or things like this did take off, it's because there is perception that you have insurance, and if you lose money to that, you will get it back in one way or another. There's a threshold, of course, but it's not like the money you lost is that one that you get back. And I think that's kind of a notion we need to work with also, that recovery, if we want to allow recovery, it means that there is a bit of risk-taking there that needs to be assessed.
I think on the concept of recovery as well, a lot of focus is given to being reactive and absolutely responding to incidents and recovering is really important. The flip side, I suppose, and we touched a little bit on it earlier today, is around adaptability, the kind of preemptive or proactive steps that you can take so that you are resilient in that way. It's not just about bouncing back from a negative event, it's actually about preparing yourself for the future as well. And I think the wave of new digital services and things like PSD2 and open banking, where it's making people potentially rebuild systems or use new systems, actually allow you to build in greater controls, both from a fraud perspective, but also from a cybersecurity standpoint as well. And I think that's a really positive thing, is to look at not just the reactive, but the preemptive steps that people can take as well.
Yeah. Wiebe, did you want to add something?
No, I was just thinking, also because in the presentation given by Stefano, you referred to, you worked at an insurer the other day, and you're referring to car accidents. Talking about how to measure how cyber resilient you are, it's an interesting question, of course, an insurer faces if he wants to sell cyber insurance policies to financial entities or whatever company. And it's a pity, I was just thinking it's a pity that we don't have an insurer around the table, because some insurers do sell cyber insurance, but I have personally no clue on the basis of what they make their decisions, because they don't have a huge database yet, I think, for their choices. So measuring cyber resilience, whatever way you do, but that's also, I think, a rather new business, which will further develop over the upcoming years.
Yeah. So what about solutions then? So, I mean, we mentioned things like red teaming and kind of testing where you are at the moment, but so what should we put in place to be more resilient? What are some of the technologies or products or solutions? What's your favorite at the moment?
Well, I'm happy to answer on that one. It's very personal. Swift idea is also a very personal point. So I don't think you can have assurance from product or solution or vendors, apart exception, obviously. All of this can help dramatically, and we could talk about hours about this, but I think the most important element is the cultural aspect. So if think that, say, you are a developer, so you build code, or you are a system architect, so you build system, it made me think about, once I read an interview of a CEO of an airline company, and he said, my job is not to fly planes, my job is to transport people, and so my first and paramount objective is their safety. And that kind of hit me and say, oh, but that's true. So if you work for a company, your job is not writing code. You write a code because you're offering a service to your customer, so you're providing something. You do it by writing code, by building system, by painting walls, depending what's your job in the company. And so a very important principle is this cultural change on a security perspective. And we need to be better there as an industry, where you want essentially focus left, you can call it that, move left, focus left, switch left, depending how you want to say. There are the different definitions to essentially say you must make sure that you do as much as you can to integrate security control by design at the very beginning of the chain. If you are coding, you need to make sure that you give everything to the coder, to the developer, to write secure code since the beginning. If you build system, same thing, to build the right control since the beginning, rather than wait and then be the guardian, two shall no pass, and block everything and have this old view that is just too late, right? And so you have to invest as much as you can, focus on fixes as soon as possible, so you get better application, better system, better services. But at the same time, you need to combine with it on a completely orthogonal view that say, regardless what I do, I have to assume breach. Whatever security control I put in place, at certain point in time, give it the right amount of time and patience, it will fail from the attacker perspective. And so I need to be able to focus on what is really extremely paramount importance for my customer base, for the community, and be able to recover as fast as possible that minimum set of crown jewels. Let me use this example. It's a kind of schizophrenic approach, right? Because you have to make sure that you do everything right at the beginning, but whatever you do, you're going to fail. But that's kind of what I see the concept of cyber.
If I'm simplifying that thought, I could say that if I want to transfer money, I first have to not lose it, right? So, any other things that you think work really well?
I think I'd take that a step further and reframe it and say I don't think it's a technology solution. I think it's people. So technology fails, people fail as well. We're not perfect either, but technology can't rebuild itself as yet. And going back to resilience and being able to respond and recover, people can. So getting the focus on the process in the people, process and technology, and understanding how you're going to react and respond, I think that's probably more important than any one particular technology or technical solution to the resilience problem.
I would tend to agree indeed. It's mostly people, mindset, that's why you need to invest. I remember in the past I had to implement a social network in the company, and I remember we were discussing adoption of this social network. And the question I was asked at the time is, how much do you want to pay to get people to understand how to use it? Is it a cup of coffee, or is it a good meal? And I think that kind of thinking about how much you pay to get people to be aware and how much you spend in terms of awareness is very important. At the same time, there are two other things which are, according to me, very important, is people will get bored of doing the same thing all the time. So the systems, you need to invest in systems that are smarter and can get some of the grunt work out of the way. So scanning your network or scanning your assets and listing all your vulnerabilities is very important. It needs to be read properly, but that's kind of the type of things that will make it going. And the other thing is, yes, red team exercise. That's clearly something you can invest on. Earlier we had our own, for example, in my case, in Sweden, I had my own hacker as part on the payroll, but I noticed that after a while, the person gets used to the environments, understands it, and does not raise the same points. Or see some obvious points that you would see it, but they don't, because they are part of the furniture, as we say in French. And so I think it's really important to invest in a good partnership with a company that can come and still always have that distance with you to see when you do something which for you makes sense, but actually does not make sense from a cyber perspective, they can see it directly. That's very important.
The intelligence-led schemes like Tiber and CBEST in the UK can have some other business benefits as well, often unintended. So we provide these services, and one of the first assessments that we did under the CBEST scheme for a very large American bank, but their operations in the UK. It was about a sort of 4 to 6 week engagement, and for those of you that aren't familiar, where they say intelligence-led, they mean take that hacker's eye view, start from the outside, do the reconnaissance on the organisation. How would you approach trying to infiltrate that organisation and compromise it? And so obviously as part of that, we go away and we do our research and we look at what's available and we look at job postings and what's on LinkedIn and kind of conduct a whole load of open source intelligence. And we went back with our report at the end and we said, right, this is how we do it, and these are the scenarios that we think you should be able to detect and respond against. And in the back we had what the client claimed was the crown jewels, because it folded out from the back of the report, and it was probably about A3, sort of A2 size thing at the back, and it was their entire enterprise architecture. We'd managed to work out exactly what software they used, what hardware platform, who was responsible for it, often what their contact details were, all from LinkedIn and job adverts and company case studies that they'd done with vendors talking about, Swift and Microsoft are now partnering and going to put stuff in Azure and that sort of thing. The CIO just kind of sat there with his jaw on the floor, and we're thinking, oh God, this has gone really badly. And I've got a team of 4 enterprise architects, and they've been trying to draw that picture for 3 years, and you've done it in 4 weeks with no one in the organization. So sometimes that external perspective and not being kind of part of the furniture can bring real benefits to the picture.
And if I can add on that, just very quickly, I think if you do red team well, it's actually a good awareness tool So it's also a training for your team, because then they see how it's done, how people do these things. So it's also not only, the bad thing is you have a report and everything is red. It's not how you should look at it. It's more like, what can we learn from this, and how can we get the company more resilient, understanding what has happened.
Just to reply to what was indicated here about using external testers for testing your organization. When we delivered the TBU framework, whether it's national authorities, whether it's my colleague bank supervisors in the ECB, or whether it's global banks, but they come to us, they come to me and ask me, we like your framework very much, but this external team on our live production system, is it really necessary? And my blunt answer is yes, it's necessary, because indeed, as you indicate, if you have internal teams, how dedicated they are and to what extent you trust their knowledge, in the end they know your system, they know your organization, they are part of the furniture indeed. And you need a fresh look, you need to have a look of a real attacker to be able to find those places, those holes in your organization where you don't expect them to be. So maybe on top of the advantages of this framework is of course also that as a pan-European global bank infrastructure, you face the risk that many different authorities come to you and say, look, I want you to be tested because you're crucial for financial stability. And this TBU framework provides the possibility for mutual recognition among authorities. If the test is done under the lead of one authority, voluntarily done but in the end by the financial entity, of course, then this can be recognized as a test to be acknowledged by all relevant authorities in this country for other countries also. So it's also a huge efficiency gain, I would say, in that context. But this external red team testers is used as that's really always the discussion point, and I can only fully agree, of course, with your stance there.
So interestingly, the solution seems to be rather low-tech rather than high-tech. Did you want to add something?
But I would like to add this, and so let me diverse on the group at least a little bit. So I'm a nerd, I'm a geek, so that's what I like. I like a lot solutions. So yes, people, cultural, it's important. But today, I think we have the possibility to build more cyber resilient solution and architecture because the technology is there, or it started being there. If you think about we need to learn how to use at maximum of this power technology like containers, so that can enable you to have an isolated architecture that can be deployed easier or better or safer in a hostile environment, let's say. So you can assume that everything is compromised, but your application or your system is still kind of protected, or at least you can instantly destroy and rebuild it from scratch. Virtualization got today definitively great capability in that perspective, on a resiliency perspective. And if we talk about speed, we need to be very fast. It's true that in some sort of shape, cloud computing today offer that possibility to scale. Now, to be honest, someone could say container application, so very segmented environment, virtualization, quick scale, like mainframe 40 years ago was offering exactly that. Fair enough. But okay, that's the past. Today we do have that capability from a technology perspective. I think that the industry need to, generally speaking, not just one company or another, we need to learn how to understand that. How do we manage all this cloud risk? We may actually be more resilient.
Pick up on that actually, if I get everybody's view. So cloud has been mentioned a couple of times, and in conjunction with third-party providers and open banking, but then also, as a solution. So is cloud a solution or is it a problem to cyber resilience? Which one is it?
Well, see if I can start. It's clearly not a solution or a problem. It's a bit of both, as always. Huh? So it has that aspect. I do believe, and I agree with you, that new technologies are born with cyber in mind. And I think that's quite important. When I think, for example, about DLT, so distributed ledger technology, it's typically something we are looking at, very interested in Euroclear, but when you look at it, it's from the start, it's with cryptography element in it. So I do think cloud also has the same type of architecture where security was there in the design. But as we said, it's a form of outsourcing. So it's not because it's a cloud where you have all this nice spreadsheet where it shows that they have all those criteria that you can trust that. Because at the end, it's still, again, how do you understand what's done with your assets? how can you get control, how can you get out of it when the situation is not good. So it's not a solution or a problem, it is something you can use to solve some of your problems, I would say.
Okay.
Yeah, and when we talk about cyber resilience for global application, we are not anymore talking about cloud. We are actually talking about orchestrating multiple different cloud providers at the same time, which had a significant amount of complexity, because indeed, how do you move data from A to B? How do you take all these big giants that are competing, also working together for you, where for the first time you can be the biggest organization in the world, you are still an extremely small fish in comparison with the vendor, which is a completely different approach that has been with third parties. If you're a big bank, everybody wants to work with you. If you're in a cloud perspective, you need the cloud provider. And that's a completely different change on a governance perspective.
Okay.
I think
yeah.
Go on.
Whether cloud is a solution or a problem, indeed the answer is it's all about to what extent do you have control if you outsource to the cloud. But I would like, in relation to the cloud, point to another element. That is that if you talk about indeed concentration risk, third-party risk, of course cloud is also now popping up as maybe there is something we need to have a closer look. And that's not only if we hear from infrastructures that they want to move to the cloud, also of course in banking and banking supervision, the cloud is a topic which is further discussions about to what extent you supervise all this outsourcing. And maybe a little bit more on a philosophical level, there was a moment in history that, say, the supervisory authorities concluded, hey, SWIFT is such an important outsourcing infrastructure, maybe that deserves a separate oversight or supervision. We have other infrastructures, general infrastructures we oversee. And maybe there's a moment in the future that we conclude there's such a concentration in certain cloud service providers or whatever software service providers, maybe we need a more direct oversight and supervision on that. We're certainly not there, but these debates automatically will come up if we get a better insight in all the mapping of the interdependencies, not only between participants in infrastructure, but also between infrastructures and the level down, the cloud service providers, the software providers, and the hardware providers. So we have an interesting time ahead.
Okay, I'm conscious of the time, so I have to move us ahead to the final round of discussion, which I want to bring to the policy level. So we talked about the threats, we talked about the financial infrastructures, hopefully a more solution-oriented approach. I think great ideas came up. But now, finally, to wrap it up to the opening speech is to, what should we do as regulators? What are the right policy tools and policy responses? We know how individual organizations can become more resilient, but how do we make the whole system more resilient? And maybe we take it so that we as representative regulators listen and some of the other panelists can give us the answers.
Do you want to start?
Thank you, appreciate that.
Robin, do you want to start?
I think you've got them, haven't you? You've already got the policies that you need. Don't they already exist? We're building a digital world. We're digitizing the transactions that used to be real-world physical transactions. There are no new crimes. There's just new ways of doing them. To quote that one. So we talked about there was the financial crash, and the result was to, as we were saying before we came on, we need better capital buffers and that kind of thing. So I don't know. I'd be interested in people's views as to whether it's we need specific cyber-related measures there, or whether when it comes to resilience, it is more about the resilience of the system and there are already the right things in place. We just need to make sure that they can scale to digital. So we were just talking about cloud, and one of the benefits is that you can scale quickly. You can spin up lots of new, server instances, for example. I think that's where the problem lies, in scaling the policy initiatives that we've already got to the digital age, rather than coming up with new ones.
Okay.
I think it's a challenge. So in terms of regulation and policy, I think there are never say that, I would not say they're enough, but there is a significant amount of those. Now the complexity is connected to that on a global perspective, because sometimes it's very difficult to even understand the requirement in different countries, and if you are operating on a global level, it's quite difficult to reconcile it. But I think on a policy perspective, we should take the example that Bibe was quoting about Tiber, and say, okay, you know, on a pan-European perspective, if you do an exercise there, the other regulator may consider this as acceptable for them as well, right? And so, and think about, we are working with a similar, in a similar community, and so if the regulator asks me, or the oversight asks me to have a specific recovery time, and they ask a stricter parameter to him, but he cannot recover in time if I'm not recover or whatever, because we are interconnected, then we end up wasting a lot of time and energy in trying to be compliant to a requirement rather than actually focusing on cyber resilience. So I think it's the role of the regulator, the oversight should be regulatory oversight, no doubt about this, but also federate and make sure that that good example for Tiber could be applied also for emergency PMI, OSCO, or other specifically requirements that are related to resilience, so that we actually focus on doing the right thing rather than just be compliant with something that you're not even sure when the doomsday happen, it's actually going to help you or not.
Yeah.
Of course, I agree with everything you say. I think it's not about standardization, because we often say standardization, but we need to take into account the difference in context from one country to another. Cyber is really localized also. It's global, it's also very localized. I think I don't have to explain this in Finland. I'm sure you know what I mean. So we need to take that into account, the fact that the borders are all different. And so I think it's more about harmonization. So kind of what you were explaining also is saying that if it works somewhere, what's the trust you can put on it if you're a global player? So I fully agree with that. The only thing I wanted to add is, even if it's already happening, I do believe that it's important for the regulators to reward transparency. So to find a way to make it not just okay, but also positive for companies to be very transparent about the issue they face, or the problems they have, and that kind of things. I think it's something I see more and more, and it's really good, but I do believe it needs to be part of the thinking in the policies, that you get rewarded when you are very transparent about your issues and how you work with them, instead of, sometimes you have to fix things before you start speaking with regulators.
Okay. I think at this point we could see if there are any questions from the audience to this very distinguished panel. Any thoughts, any questions? Let's see. There's one at least in the back.
Hello, Titti Tanninen from the Bank of Finland. We've been talking a lot about data security and resilient systems, and how no major disruptions have occurred yet in the financial services area. And so, faced with the difficult decision of having to choose between a possible data breach and a possible system failure of the same magnitude and at the same time, which one would you choose to avoid firsthand and why? You couldn't avoid both.
That's a nice one.
It's a good one, isn't it? Because often when people think about security, they think about keeping things secret and safe. You imagine safes and barbed wire and locking things away, and in part because of the little green padlock that you see in your address bar. But it's the confidentiality of data, it's the integrity of it, is it right and correct, and is it available? And one of my, there's no right answer to it, but when it comes to your own personal bank balance, if you could choose to have it secret, correct, or accessible, which of those three would you pick? That's kind of the question that you're asking us. So, if I answer it in that context, I'd rather that my money was available, and I'll take the chance that it's that I've got more than €5 in my account. I think the availability is an immediate thing that then the systems back up and people can carry on. The data breach, and something that I think we as as society is still coming to terms with is that information can be copied and it's gone then. You know, the data breach, there was no interruption to the service, your bank balance is still right, but now someone else has a copy of everything they might need to impersonate you. And I don't think that globally, as a society, we've come to terms with that yet. And we're going to need to, because you know, big breaches keep happening. You know, Equifax with 150 million, you know, plus people as records taken in the United States, and you know, we've heard many times today, there's no such thing as 100% secure. You're going to get breached. So if our data is going to be out there, we're going to need to look at that. At least there's no then interruption to the service. But no, it's a good question.
It's a very good question, and although I think I agree with you that our life would be much more simple if the focus was on availability. So if actually the target is to restart the whole system faster, you are more resilient, because I think we can achieve that. So it means, as I said earlier, you need to accept that corruption of the data is okay and you can live with it. But today I think the focus is really on corruption. So I would say it's not even, you know, being available or confidential, it's really making sure that when you have a balance, it's the exact one. I can't tell you if it's the correct way to do it, but it's really today the focus. If you would only reopen your services if you are sure that what you will show is correct. And I do believe that, I tend to agree with what you are saying. It would be probably more beneficial for the whole system to focus more on availability. Of course, you need to avoid corruption at all costs, but the first item which should be, yes, the system is back up and you can go on.
On the other side, so I totally agree about availability, don't get me wrong. Thanks for the beautiful question again. But I think that it also depends by what kind of data we are talking about. Because I can, on the other side, imagine, and I take away my hat of my job, I take away of normal dude living a normal life. I can live 2 days without getting access to my money, which is a luxury in the world we live. I'm full aware of that.
Because you use cash.
Because I use cash, exactly. Full stack of cash at home in my kids' play. I can. There are some data of my life that I absolutely don't want to share with anybody in the world because it may have an impact. Because imagine data from my past, imagine data from my whole health condition that once it's gone, you cannot recover it. And it could have an impact on my life, an impact on my future, on the future of my kids, depending in which country you live. Your political orientation, your secular orientation could bring you to jail. That data, once it's done, is gone, right? 2 days without access to money, it's bad, it's really bad. Maybe you can survive it. So again, availability, totally, I sign it off. That being said, I think we live in a data-oriented world, and at a certain point in time, I will not be sure about the answer anymore.
Yeah. Okay, I think that was such a dynamite question that nobody will be able to top that, so we'll wrap up here, and I'd like to just thank the panel for an excellent discussion. Thank you very much.
So thank you, panelists. I think the last question was very interesting and very philosophical, and I think that there are only right answers to that question. But it has now time to wrap up the conference, and I will try to sum up the results of the 3 sessions in these closing remarks. And to start with, as pointed out in the opening speech, there are many parallels between financial stability and cybersecurity, false confidence, interconnectedness, resilience, and contingency planning. One has to find the right balance between creating a safe and sound business environment while also allowing new innovation to take place. And it is important that we take cybersecurity beyond compliance. Regulation and compliance is a very slow process. Industry moves so much faster. What can we do? I think this question remains unanswered, and we have to come back to this later. A thing called trust was taken up by several speakers. In order to have someone to trust you, you have to have integrity, you have to have capability to deliver what you have promised to deliver. And there also has to be empathy. The other party must believe that you have good intentions. We also learned that in an open society, openness creates vulnerability, and we have to be aware of that. Another topic which was taken up by several speakers was outsourcing. It was stated that outsourcing requires sufficient and effective risk management processes. You cannot outsource your responsibility. But on the other hand, outsourcing is about division of labor. It is not efficient to do everything by yourself. We also learned that Sweden is becoming a cashless society, and we heard about the consequences of this development. In the panel discussion, it was said that personal cyber risk management is important for all age groups. Raising awareness was regarded as key in this sense. And there are different approaches to improve cyber resilience. We need to become better in sharing information with accelerating speed. And what we need is accountability and responsibility and a telephone number of a contact person. We need to know to whom call. And to recover from cyber incident, you have 48 hours to correct, cooperate with counterparties and authorities, repair everything, and return to normal. It is not much. It was also stressed that you need to have measures how fast your system can be breached and how fast you are able to recover. It was also mentioned that getting better in cybersecurity means sharing information. And the importance of testing was highlighted a couple of times. Testing can be also regarded as team-building exercise and a way of increasing awareness. And for example, red teaming could be useful for getting an external perspective. Attention at the board level is also important. Good governance is the foundation of prudent business, risk management and compliance. It is also important to have a strategy for resilience. People was also mentioned as key. Technology cannot amend itself, at least not yet, but people can. And in the morning we learned that the criminals are attacking financial institutions because that's where the money is. In the afternoon we heard that it is not only about money, the criminals want also to get access to data. Data has nowadays economic value and it is becoming more and more important. When there was a question on policy instructions to regulators, we were told that we have the policies in place. We just have to scale them, the existing policies and policy initiatives to digital instead of inventing new ones. Good advice for us regulators. And to finish with, we need to take care of our cybersecurity. Nobody wants to become the #1 in Twitter with #data breach. So I want to thank all distinguished speakers, panelists and audience for excellent questions and presentations and comments. And if you have any time to stay here after these closing remarks, we invite you to network and mingle next to the in the area next to the conference room. During this networking, there is some drinks and finger food snacks. Also, they are also served. And the last thing that I would like to say to you is that you can find the recording of this event later from the YouTube channel of the Bank of Finland. So thank you very much and see you in Stockholm next year.